Looking to drop about 0.1% over in France. You're looking at maybe a loss of 10 points so far at this point.
Okay, so a mixed picture then when it comes to European futures. US futures flat to negative as we established. Looking for new catalysts, really, it seems, to take the risk rally further that we had seen up until recently in stocks. Certainly the month of November turning out to be a little more positive for risk assets. This is the FTSE 100 then, down by 0.2% as we get out of the blocks this morning. We've got the pound is down by 0.3%. So actually taking some focus today in FX markets, because the dollar's fairly stable, a little bit of a move higher. The euro also pretty flat, but the pound actually down by 0.3%. This is the picture on sovereign bonds then, pretty uniformly across the geography here in Europe and indeed in the United States. We're seeing buying of sovereign bonds and those yields coming down, but some of that just a reversal of what we saw on treasuries yesterday. And then the commodities column, I mentioned Brent. We'd actually seen a report out around inventories in the United States, suggested those inventories were climbing, and so we'll continue to analyse what that means. But that puts some downward pressure on perhaps those oil prices, down around 1% on WTI. So a sort of flat to positive picture opening at the start of European trade. Tom, what do you see on the sectors?
Well, picking up on your point around oil prices and the increase in inventories that we're seeing in the US, energy as a sector is currently down 0.5%. Sam Umstead from our Markets Today blog had flagged basic resources, given the run-up in iron ore prices, maybe a bit of softening there. Of course, the focus very much when it comes to iron ore is what is happening in China. You did have that softness again in property prices. Basic resources as a sector then down 0.4%. Consumer, and this is where luxury sits, so this is the Burberry story, down 0.7%. We'll unpack that in more detail through the hour. Tech is also off by 0.4%. And I think it's worth flagging what's happening in travel and leisure, because you can see a hit there again in this sector, down 0.6%. One sector on this board, at least, in the green, utilities, a bit of safe haven tilt there, up 0.4%. Within utilities, that sector gaining across the benchmark, 453 in Europe, up 0.2, down 0.2%, I should say, Anna.
Yes, the IBEX misleading me. It is up 0.3, but broadly, you're right, we're a little weaker across these European equity markets. Let's get to the market themes of the morning. Sam Umstead joins us from the Markets Today blog to talk us through some of the stories. And of course, geopolitically, Xi and Biden is the focus, but we're going to get some analysis from our colleagues in China in just a moment on the takeaways from that. But let's go to some of the Chinese data that's been driving sentiment. I mentioned that, thinking about weakness through the Asia session, but once again, it's about Chinese housing.
Yeah, the Chinese property market again, so we've had quite a lot of data come out of China over the course of the last week or so. It's been very mixed. Seemingly every day there's kind of a different thing to take from each one. This is pretty uniformly pretty poor, especially given the efforts that have been made by authorities there to boost the housing market. So I think this is likely to be taken quite poorly. And this may also be part of what's weighing on the iron ore price today.
Okay, Sam, when it comes to US politics, averting a shutdown, we get to the brink and they finally somehow pull a deal out of the hat. I guess the question is how long this continues. It kicks it into the long grass for now.
Yeah, I think that's right. It's to look at it as a delay. Right. This is going to come back round again. I think it's not till the new year, so you get some respite over the festive season.
It's not the very long grass, though, is it?
Not very long, indeed.
Long
we were talking earlier in this week.
Still on the fairway.
Yes. We were talking earlier this week about Janet Yellen kind of hitting back at Moody's. A lot of those ratings agencies, political instability there, or polarisation within the political environment there is one of the key issues. Yes, this moves this down the line. Very likely we'll see exactly the same thing happen again in 2 months' time.
Okay, Sam, thanks very much. Sam Unstead from our Markets Today blog with the latest on some of the themes they're writing about. And if you want to read the Bloomberg blog, Markets Today, then go to the Bloomberg UK website. You can click through to it from there, and TLIV Go is the function to find it on the Bloomberg terminal. Coming up, we'll get to some of the stocks on the move. Some really interesting stories out there, including Burberry. The British luxury maker loses some of its shine. We'll bring you the details next. This is Bloomberg.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Markets Today. Almost 7 minutes into the European trading day, you're seeing losses across the benchmark of just over 0.1%. Let's get back to the geopolitical story of the day of the week. US President Joe Biden has described talks with China's Xi Jinping as, quote, the most constructive and productive they have had yet. For more, in terms of the context, let's bring in Bloomberg's Alan Wan in Shanghai, who's been following all the twists and turns. Alan, what is the latest?
Well, I mean, it was most dovish comments I've seen she ever make. Obviously, his audience are U.S. business leaders are concerned not just about the slowdown in the Chinese economy, but whether or not foreign capital is still welcome. I mean, he said that China wants to be friends with the U.S., that he doesn't want to see he doesn't want any kind of war, hot or cold, and it's really the first clearest proclamation of desire for friendly and mutual ties between two countries. And then, he talked about the shared history, right? All the way from the Flying Tigers, which helped China during World War II. They talked about, his time in Iowa, like 30 years ago, up till his last meeting with Biden. So it just the storytelling aspect, which I think appealed to a lot of the audience. And then also in terms of deliverables, I mean, it seemed like a lot of these deliverables bent towards the U.S. side, crackdowns on fentanyl, resumption of military dialogue, more student exchanges, sending 50,000 Chinese students over the next 5 years. American students to China in the next 5 years, and also talk about pandas as well, maybe like sending pandas back to the U.S. So these are all kind of things that I think will, will sell well to the American audience. And in terms of who was there at the actual dinner, a mix of powerful investors in China. You got Blackstone, BlackRock. I'm sure Schwarzman is going to be pleased to hear that the U.S. is going to send more students for these scholarly exchanges, given the fact that he has a program over at Tsinghua. And then you had CEOs of some companies like Boeing and Visa, who are facing more challenging conditions in China, right? So they were at the table. Of course, Apple's Tim Cook was there as well. Then you had some, let's say, intellectuals such as Ray Dalio as well, sitting people who keep on talking about how important it is to have engagement. So all in all, even though you didn't really get any details on how China is going to lure back a lot of these investors, given the fact that we've had all these kind of national security concerns and detentions and whatnot. Nevertheless, what she said about seeking peace, I think that's something that I think a lot of foreign investors are going to focus on. The fact that China is not seeking any kind of conflict, given the fact that we have two wars going on at the same time right now.
Okay. Alan, thanks so much. Alan Wan in Shanghai with a briefing on what came out of that dinner. Some really important news lines. I'm glad we got to mention the pandas as well. Let us check in on some of the individual stocks that are on the move this morning. There are quite a lot of good stories to dig into. Joe Easton is here to do that for us. Joe.
So Burberry hit pretty hard in the opening trades in London, down almost 10% now, the worst performer on the FTSE 100 by some way, and we're also seeing it feed through across the luxury space this morning. So the Gucci owner Kering dropping almost 2%, LVMH and Moncler over in Italy, some of the biggest read acrosses from those. Barclays in a note this morning calling for earnings consensus at Burberry to come down by around 10% following the weakness reported in that report. Burberry warning moments ago that they might not meet their sales target for the full year if the weak demand does continue. So that's a big theme for European stocks today. Then on the second board, there's some other big movers to come up as well. Firstly, Siemens, one of the best performers today. A lot of weakness in their Chinese demand, but they're doing a €6 billion buyback and suggesting that some of their markets are potentially bottoming out now over in automation, robotics in factories, that kind of thing. Embracer, that's the best performer on the Stock 600, believe it or not, the maker of Lord of the Rings video games over in the Nordics, gaining around 14%, doing really well at the moment. And then a couple of food-related stocks down the bottom, investors losing their appetite for HelloFresh after a profit warning last night, down 20% now over in Germany. That is also related to the US, a bit of a slowdown there, but they do have their own factory issues as well, supply chain concerns hitting them, the maker of food delivery. Now, breaking news is that Mars is going to buy Hotel Chocolat, the UK maker of luxury chocolates. 164%, that one is rising. It's a massive premium, more than double where the stock was trading yesterday. A very sweet deal, a tasty deal. There's lots more that we can do with that one, but I'll probably leave it there. I could probably keep going, but that is, of course, the king of last-minute Valentine's Day gifts, isn't it, Hotel Chocolat? We're going to switch over there and look at a few more earnings stories to look at the moment, and some ratings changes as well if they do. There we go. So Aegon over in insurance, over in Amsterdam. Strong sales in their life insurance business for the Dutch giant. Soitec, the tech firm out of France, gave a profit warning after the close of trading yesterday. And we've got Allegro, which is e-commerce in Poland. Weakness in the Czech Republic. Finally, Marks & Spencer's upgraded to buy at Goldman Sachs for the first time in 3 years, following strength in clothing. Goldman says buy shares of M&S this morning.
Joe Easton from our equities team. A number of colourful stories bringing us the detail and the puns. Thank you, Joe, as ever. Let's get a broader look at these markets then, from equities to fixed income. Bring in Annika Beneby, Senior Portfolio Manager at Julius Baer International. Annika, good morning. Thanks for joining us in the studio. We are seeing a Goldilocks scenario for markets. Happy Thursday. What underpins that optimistic view?
Good morning, and thank you for having me. It's great to be back. Well, what underpins that is I see no imminent recession in the U.S., right? We think GDP growth is going to come in around 2.4% in the U.S. Obviously, we had some very good news coming out from the CPI data, which confirms the disinflationary trend, 3.2% CPI. Looking at the senior loan survey as well, there's going to be some slowing in credit dynamic. So going into 2024, I expect growth is going to moderate in the U.S. And so you're not going to have as high a probability that inflation flares up again, and that's creating a really good scenario for markets. It's quite positive. On top of that, the Fed, I think, is done raising interest rates.
Annika, good morning. Is it possible that we just haven't, because things maybe look quite rosy at the moment for the US economy, but maybe we've just stored up the impacts of all of those back-to-back rate hikes and we haven't yet felt it on the US economy? What's the sort of downside risk scenario then from that perspective?
Well, obviously the downside risk is that things slow quite significantly, but I don't think that's going to happen. If we've watched how interest rates have not impacted the U.S. economy as we expected, if we're looking at households, for example, they were repairing their balance sheets since the great financial crisis, so they went into this in a healthy position. Traditionally sensitive interest rate sectors in the U.S., housing, for example, has held up very well. People are locked into 30-year mortgages at 3%. Why sell? That's one of the reasons that the housing market is holding up well. And if we look at corporations, finally, especially the ones that I look at, quality growth companies, they have large piles of cash earning 5%. So higher interest rates have actually been earnings accretive for them. So going forward, I think the U.S. is well poised to withstand higher rates for longer.
Oh, for a 30-year at 3%. That would be nice, wouldn't it, as an option? When it comes to where you want to lean in to this optimism, then within the equity space, what are you looking to add?
So I would preface that by saying, given that we're going to have onshoring of supply chains, geopolitical risks flaring up, I would see a world of closer to 3% structural inflation rather than 2%. I think we can very much stomach that. And in that world, equities I prefer to fixed income. I think quality growth equities are going to be very well poised for this environment, especially in a higher interest rate environment. They have high cash flows. They have sound balance sheets and sector-specific calls. I like IT. Some of the stocks in the Magnificent Seven, if we hear that they're expensive, but if we account for growth and earnings prospects, they actually look quite cheap, and I would cushion that exposure with healthcare.
Yes, it seems those Magnificent Seven and tech has been the source of some of the momentum trade that we've seen of late, and that's pushed those even higher despite those concerns. You are cautious on China, I think, from your notes, and I ask about this because, of course, we're watching the meeting take place, or has taken place, between Xi and Biden. Went on for hours, very constructive, achieved a lot according to President Biden. We heard very warm words from the Chinese president. Yes, there was some other commentary from the US president, but the main message seems to be one of positivity between the two. How significant is that sort of missing China growth engine? Clearly, there's still growth in China, but it's not delivering post-pandemic in the way that many people thought it would.
Well, first of all, the talks are a very, very good thing. It's good for sentiments, and clients are certainly noticing that. But I do remain cautious on China. That consumption just has not ramped up in the way that we thought it would. Perhaps because consumption is not a priority for the Chinese government, but I think more so because the property sector is so severely challenged in China. It represents 30% of GDP in China. Demographics don't make things any better. Less people are moving into cities. The property market is in structural oversupply for residential housing. So that's going to take a lot of time to rebalance, which means the Chinese economy will probably be stagnant for some time. And that lends to Chinese equities probably trading range bound.
Annika, thanks so much. Thanks for joining us. Annika Benabi, Senior Portfolio Manager at Julius Baer International. Lots more on the markets ahead. This is Bloomberg.
Okay, so you're moving in on me. Quick. Distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
DOJ or other authorities
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make.
China is still a weak market, several reasons. You know that the private consumption is not picking up. Obviously, as a major exporter, they're also having a drawback by the weak economy. So what we are looking closely into, let's say, the start of the calendar year. So we believe in the second half of the year, there will be momentum, eventually after Chinese New Year. The government is very well aware that they have to defend their operating model and making their industry more competitive with technology. They talk about high-tech manufacturing, and this is where Siemens come into play. We are there with our software, automation, hardware, and electrification portfolio to support the companies, and it's about 350,000 small and medium-sized companies to really step up with new technology. So we are looking very closely. China will be a decisive element in the equation.
You know, there's a lot of talk about the German economy, this sort of refrain about the sick man of Europe. What is your experience of the German economy right now? I'm looking at the orders in the fourth quarter, very strong. What is your experience of the German economy?
We have to play our strengths in Germany, which is innovation, innovative. We have very, very strong small and medium-sized companies. We have strong ecosystems around healthcare, around chemicals, automotive. So we are working with our partners, with our ecosystem on really making them stronger in using technologies. Our strengths, Germany's strengths, is innovation, bringing technologies to the market. This is the reason why Germany is also an export country. We have very, very strong small and medium-sized enterprises. We have very strong large companies. They have to build their ecosystem and bring it to the future.
It happened this week with the government, the courts ruling against the 60 billion euros, which is going to be really dedicated to exactly what you're talking about, right, to that transformation of the economy. Do you think that that is a harmful development for the German economy?
So, I mean, number one is, in times of transformation, there's one more element which is of essence, which is speed. We have to really gear up our speed and execute exactly along the agenda what I have been talking to you. So this is, of course, a setback because the financing was ready to go. Now the government has to work on a plan B, how to really focus then on the right things to do, which should be future-oriented and really putting money in our innovation strengths. So that's what we hope. So speed is of essence, and therefore we are looking very closely how can now the government turn it and bring the right focus to what really matters.
Okay, that, of course, was the Siemens CEO, Roland Busch, speaking to Oliver Crook. Now to a very different story in terms of at least the market reaction, very different sector as well, of course. The luxury space and shares in Burberry firmly in the red this morning, currently down over 10%. That's after the British company warned that it is unlikely to hit its revenue guidance if the slowdown in luxury demand continues. Let's bring in Deborah Aitken then from our Bloomberg Intelligence team for the analysis. Deborah, what stands out to you from these results? Investors are not liking these numbers.
Particularly the comparable to Q2 comparable same store, because when we look at the half one, it looks as though they've met. But there are some anomalies in there, so FX is going to be better for them on the revenue line, on the profitability line, so that's a little bit of a soother. But behind the numbers, Q2 is a particular slowdown on comparable store sales.
Okay, could we see downgrades to expectations on Burberry then, given what we've heard from them around trading in the September quarter and caution on guidance on fiscal 2024?
Yeah, so the caution on guidance is to say they're unlikely to make what was the longer term low double-digit growth. And when we look at consensus for constant currency is on 9%. We see that coming down by about 100 basis points so far. Into what we can see for the Q3 and Q4 versus the prior year, and where anomalies move on, volatility the year before. What we do have, when we look at the operating, there's a real wide range, 552 to 668, and they're guided on the adjusted operating profit line at the bottom end there. But they have put a huge amount of investment into new products, new stores, and lots of innovations behind the potential of Daniel Lee's new product range that is out there from September and should build into 2024.
Stressing the word potential there, Deborah.
Yes.
When you take a step back then and look at the earnings season coming to a close, and more broadly the themes and how this luxury sector has reshaped as you look to 2024, what are you kind of piking your focus to?
I think we're looking at 2 to 3% pricing from the top brands, but we have to remember into this Q3, out of the 10 misses, including Burberry, 3 were really big names if we look at Richemont, LVMH and Kering. So we'll be really looking at what happens there. And then about 3% volume growth, because there's so much more investment, internal investment, a little bit of M&A, China to come back double-digit again into 2024. So we're looking at around, they say normalized growth, that would be 5 to 7%, maybe high single-digit earnings growth. And we actually end, though, this will be interesting to see how we do in the second half. We're looking to end, particularly for Q4, with 8% sales growth this year and 14% earnings growth against a stock market for the sector, which is down 10%.
Okay, yes, there's something to explain there. Deborah, thank you very much. Deborah Aitken from the Bloomberg Intelligence team. Coming up, we'll get back to that meeting between the Chinese President Xi Jinping and the US President. More analysis next. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open
for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that
it.
really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come. I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. Making progress, Joe Biden and Xi Jinping agree to restore high-level military communications as the Chinese president says Beijing wants peaceful ties with the United States. European stocks trade mixed while the dollar strengthens as traders ask if gains on cool U.S. inflation are overdone. Plus, Burberry plunges after the trenchcoat maker warns this year's revenue target may be out of reach. Those are the headlines then, Tom. We need to dive into the geopolitical story of the moment.
Yep, US President Joe Biden has described talks with China's Xi Jinping as, quote, the most constructive and productive they have had yet. President Xi says China is ready to be a partner and friend of the United States.
Whatever stage of development it may reach, China will never pursue hegemony or expansion and will never impose its will on others. China does not seek spheres of influence and will not fight a Cold War or a hot war with anyone.
The US president hailed the resumption of military communications, but the positive tone, well, it was overshadowed by a comment he made to reporters.
And Mr. President, after today, would you still refer to President Xi as a dictator? This is a term that we used earlier this year.
Well, look, he is. I mean, he's a dictator in the sense that he is a guy who runs a country that is a communist country that is based on a form of government totally different than ours.
Okay, let's bring in now someone who was in the room for the dinner with the Chinese president. Joining us from San Francisco is Gary Dvorchak, Managing Director at the Blue Shirt Group. He attended the business dinner held overnight with China's President Xi Jinping, of course, and Gary's family, interestingly, have known Xi since the 1980s, since 1985, when I believe, Gary, you actually gave up your bedroom as a teenager for Xi Jinping when he was then, of course, a much more junior official. So you have that personal connection, and you've kept that going over the years. Gary, what was the mood in the room? What was your sense as to how committed the Chinese leader is, given your experience, given your knowledge of him, in terms of his real commitment, that commitment to a closer relationship, a less hostile relationship with the US, and whether he's actually going to follow up on the rhetoric with real action on the ground?
So, Tom, thanks for having me on. I appreciate it. And the mood in the room was incredibly positive. I think that no one knew, the expectations were mixed. No one knew what to expect necessarily. No one knew how the meetings during the day would go, and they went pretty well. His speech was fantastic. I can't claim to have heard every speech he's ever given, but this one, he set all the right tones. The messaging was exactly what he wanted to get across. The fact that China is a peaceful country, they don't want the dissension and the steps. Some people worry about steps towards war, and they certainly don't want that. They want to coexist peacefully. So, he hit the right tones. He did it in the right way. He humanized his speech with references to his connections to America in very different ways. When they had one of the flying tigers there from World War II, he mentioned, my own family situation when he came to Iowa and stayed with us in 1985. So he he softened it. It wasn't strictly a political or a policy speech, but he softened it and he humanized it. And I think that really got the audience there to really appreciate the fact that, you know, he's sincere about what he's saying.
Gary, nice to speak to you today. So, he clearly, you've mentioned that you liked his speech. He clearly went there to make friends and to possibly encourage further investment into China. And I think a Chinese official has been tweeting out photos of Xi when he was there in 1985, at the time that he came to Aya and he stayed with your family, Gary. But then when we talk to business leaders who, and you operate, I know, in China and the US, so you'll be familiar with this conversation, they say they want more transparency and they want all kinds of different policy changes from the Chinese government. Does this friendly speech lead us to believe that any policy change is coming?
Yes and no. At the top, the leaders set the tone, right? So a speech that was more aggressive or hostile would have definitely pushed back on the business community in terms of wanting to commit to China. On the other hand, if the tone at the top is set in a way that is positive, I mean, that gives the marching orders to the people that actually implement all of the rules, regulations, and everything else, right? The 3 million members of the CCP, all the people in the government, and it works the same way here, right? So he's trying to set the tone, the direction, the marching orders. Your point is exactly correct. The devil's in the details. Will we see follow-up? Will we see, a loosening of regulations that we think are too tight? Will we see more of a friendly investment environment? I think on the margin, yes. I think what we can't, and when I say we, Western companies, foreign companies that want to do business in China, what we can't expect is things to change overnight, right? It's a process. And, you know, Xi Jinping in the speech made the point, you know, they have 5,000 years of history. Things don't have to change in a year or 2 years. So it can be an ongoing process. It's been, 50 years of opening up. Since the Mao era ended. So, but directionally, it's going in the right way, right? And I think that's what the business leaders. Again, I talked to a lot of them after we talked there in the room after the speech, and they all felt like incrementally, this was the right direction and the right messaging.
Yeah, and incremental is an important word, isn't it, in that context, Gary? How vulnerable do you think that incremental process is, or incremental progress is, that's been made over the last 24 hours or so, to the changing political winds in the US? How vulnerable do you think it is to a comeback, if that's what we see, from the Republican Party? Are you concerned about that?
Well, I would say yes. I mean, I watched the Republican debate the other night, and it's cheap and easy to make China a punching bag, and I think it's not fair to do that. And so I think there's going to be more harsh rhetoric on the Republican side, and both parties indulge in it at different times. So I don't want to blame one or the other, but it is, we're a divided country, and having a common enemy brings people together. So it's kind of an easy one, and we don't have the Soviet Union anymore. But it's not, the painting China as some sort of existential threat or some sort of evil empire. It's not productive. First of all, it's not true. Second of all, it's not productive. And so I would hope that, our politicians, as we go into 2024, can tone back some of that rhetoric. Because in the end, whoever gets elected, China can't be our enemy. They have to be our friend. We have to have a trade relationship. We have to have a good relationship in general. We're the two largest and most powerful countries in the world. And that, I don't want to overstate the fate of humanity rests on, but certainly there's huge stakes involved for both of our countries to get the relationship right.
The stakes are certainly high. Gary, thank you very much. Gary Dvorchak, Managing Director at the Blue Shirt Group, whose family, as we said, has friendship with Xi's family going back to the mid-1980s when President Xi visited Iowa, stayed in the United States. Let's take this conversation on a little further. Kerry Brown joins us, Director of the Lau China Institute at King's College London, author of China Incorporated, The Politics of a World Where China is Number One. So, Kerry Brown, really interesting to get your take on what we heard. Warm language, storytelling from the Chinese president. What message did you take away from that?
Well, I think that the Americans have sent 4 high-level leaders to China in the last few months, so I think things have been warming up a bit. I mean, what we've learned, I suppose, is that a kind of difficult relationship is not really sustainable. They've got to have some kind of relationship. It's just the sort of relationship they have and the areas they look at. So the agreements that were reached yesterday or overnight between Biden and Xi are quite important ones. The military one is particularly important to have dialogue because that's where there's going to be most likely misunderstanding. There's a big election in Taiwan in January. We don't know what the outcome of that will be. It's extremely uncertain at the moment. There may be a kind of candidate standing who has difficulties for Beijing because historically he's been a supporter of independence. And of course, the American election next year. So there's still a lot of uncertainty, but this meeting has definitely helped reduce a little bit the risk. But these are always going to be very, very difficult relationships.
Kerry, from someone who has studied and thought about China and the politics of China for so long, how much do you think the decision by Xi Jinping and his team to make this trip and have this summit is driven by domestic concerns, and particularly domestic concerns around the economy?
Well, I think that China finds America very unpredictable and a little bit scary these days. It's a big, big transformation. In the past, I think it was the other way around. We all found China a bit unpredictable and didn't know what was going to happen. And now we've got Xi Jinping, presumably for a long time, as long as he's physically capable. But we don't really know what's going to happen in America. I mean, I think the presidential level, I mean, it's completely uncertain what will happen next year. At congressional level, I mean, apparently there is more bipartisan kind of consistency, but it's still a very unpredictable picture. So I think China often is more acting because of the uncertainty it sees in a world which it once found much more predictable. And that's had a big impact on it. And I mean, as you know, China has faced quite big economic challenges, and these are going to be forefront of Xi's mind. I think that's why America is important to it. It's got to have a relationship with America. Decoupling was never possible. Maybe a dual track, but not decoupling.
One of the books you've written, Kerry, is called Xi, A Study in Power. I wonder what you made of the exchange. A journalist asked President Biden, do you still think that President Xi is a dictator? And the US president said, well, yes, he is, and then went on to provide some sort of caveats or nuance, but made that comment. There's been some pushback from Chinese authorities, but crucially, President Xi didn't mention it in his speech. It didn't seem to derail relationships in the room at all. What do you make of that conversation?
Well, it reminds me a bit of a long time ago when Nixon and Mao were talking, I think in 1972, and I believe that Mao said to Nixon, look, although we're getting on in private, in public, we're going to have to carry on beating each other in the press because our domestic audience. I mean, it's still the same story, right? I mean, for the domestic audience, Mr. Biden has to say Xi Jinping, the man he's just spent a lot of time with, is a dictator. But I mean, what does that mean? I mean, the political system of China and the political system of America are very, very different. Xi Jinping is a powerful figure in a one-party state. Yeah, I think that's where everyone agrees with that. I think dictator is a term that will appeal to people in America because that's what the story they want to hear. But I mean, the most important thing is when they're in the room with each other, did they get on and did they manage to come with an agreement, no matter how much they label each other?
Kerry, we know as well there were conversations around Russia, Ukraine, Russia's invasion of Ukraine, of course, that continues, and of course the conflict between Israel and Hamas. There is obviously a desire, it seems, from the US side for China to play some kind of mediating role. Is there appetite within Beijing, for example, to rein in Vladimir Putin? Is there appetite from Beijing, at least in the margins, to have a conversation with Iran about its support for Hamas?
Well, I think that China has desperately tried to sit on the fence for most of these issues. For all the people that talk about it being a hegemon that wants to dominate, I mean, these are opportunities when it probably could have waded in, particularly the Russia one, because of its relationships with Russia, and it's just not done that. It's got a pretty good record in the Middle East because it's managed to be friends remarkably with everyone. I mean, there probably is a role for it, but the problem is the role it wants and the role the United States wants for it and others is not the same. I don't think that there's going to be a big change there unless things get really bad. And then China might have to have a different role, might have to do something more. But at the moment, I think it's just going to carry on being quite passive.
Kerry Brown, always appreciate your insights. Director of the Lau China Institute at King's College London. Thank you very much indeed. Coming up, new research shows The corporate world is lagging in its efforts to track carbon emissions. We discuss that and much more with Rich Lesser, the global chair of Boston Consulting Group. Do not miss that exclusive conversation. It's coming up. This is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising New York City?
The mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Markets Today, 8:46 here in London. European trading looks, fairly uninspiring this morning, or mixed, should we say. There are some areas of real positivity. The DAX up 0.5%. Overall, though, we are pretty flat on European stocks. Now, let's talk about, as we build towards the COP conference, new climate research has found companies are making little progress on tracking their carbon emissions. The survey, jointly carried out by Boston Consulting Group and CO2 AI, found only 10% of companies reported comprehensively measuring all their emissions. In addition, only 14% of companies indicated reducing emissions in line with their targets. Let's talk about this and much beyond with Rich Lesser, the global chair of Boston Consulting Group. And we thank you very much, Rich, for coming in to talk to us. A couple of reports out this morning. Let's start on this one about companies and what they are managing to do. At the top level, maybe a little disappointing that they're not managing to do more to monitor carbon emissions. There's been a lot going on over the last 12 months. What explains this sort of lack of focus?
So I think we have to look at the challenging parts, but also the encouraging parts. The challenging part, as you say, is overall comprehensive measuring of carbon emissions end-to-end has really stagnated at around 10% of companies, and we need that to go much higher. That's the challenging part. What we've talked the most about with our clients in a variety of settings is that scope 3, particularly your upstream scope 3 with your supply base, is probably the most actionable lever that can make the biggest difference in many, many value chains. That's grown 19%. That went from 34% to 53% of companies measuring elements. So they're not doing comprehensive measurement. We need to do more, but they are measuring some of the most important parts of their value chain at a much higher rate. So that's the encouraging
So they're thinking a lot more about what their suppliers are up to.
Exactly. Yeah. And we need so much more of that. That's such a powerful lever.
And look, Anna nodded to this in her question, which is, and the sense I was getting from you, Anna, was, to what extent is this a time frame question where we've had the Ukraine war, of course, and so the readjustment around what happens with energy prices, all the supply chain issues that we've dealt with post-COVID, and that has sidelined this as a priority. Is that part of what's been happening, or is it more nuanced than that? Does it step up again when we get to a kind of new normal, whatever that looks like?
I think the world, business, governments, consumers, everyone has been focused on all of these challenges over the last few years. First COVID, then wars and supply chain disruptions. And so I do think climate hasn't always stayed as high on the priority list as it should. For many companies it has. I mean, there's a large number of companies where it has stayed a top 3 priority of management. They've navigated through it, but there's too many places where it hasn't been as high a priority as it needs to be. Hopefully this COP, hopefully the discussion yesterday between President Xi and President Biden, hopefully we can start to refocus some energy on the urgency of this and really accelerate progress. And hopefully the world enters a bit more stable period, though, of course, we'll believe it when we see it.
We'll see. There certainly seems to be a little more friendship and stability in the relationship between Biden and Xi overnight. We've been covering extensively the meetings taking place in San Francisco. How much difference does this make to your business, Rich, and the clients that you talk to? Because stability in that relationship, it matters in a lot of ways.
It's incredibly important that the 2 largest economies in the world, the 2 most powerful militaries in the world, that the leadership are having a dialogue at all. Second, being able to show that there can be collaboration amidst a lot of competition. And third, that on some of the most important topics like climate, they can recognize there's a shared agenda between those 2 nations and a shared agenda for those 2 nations to provide leadership to all the nations of the world to say that, yes, we can compete, yes, there will be tensions, but on these dimensions, we can push things forward. I think it matters enormously to our clients. I think it matters to all of us.
We know they also talked about AI, and no doubt you, in terms of your conversations with clients, AI is an important topic. But when it comes to Boston Consulting Group, I'm interested in terms of how it changes your hiring, in terms of the jobs that you don't need as much now and the jobs that you do. How is AI shifting how you're thinking about headcount?
So over time, I think many companies will change the patterns of hiring. For us right now, it's just much more of an enablement tool. We've rolled out generative AI to all of our staff. We've given people the opportunity. We've made very clear ground rules, because in some ways you can use it, in other ways you have to be very careful. But we've really viewed this as a tool to take our team and allow them to be more impactful, spend more time on the highest value added work for our clients, and less time on things that, were part of the job, but actually not so enjoyable necessarily, and often took a lot of time. So we view it as a tool, but also importantly, I mean, hundreds of our clients, over 1,000 now, want to engage on generative AI, what it means for their business. We're doing a ton of engagements with clients to help them sort out their priorities, how they drive value from it, and how they really make it happen. It is the biggest topic of this year, I would say, along with resilience to deal with the near-term pressures, of course, and climate and sustainability.
Rich, thank you very much. Thanks for joining us. Rich Lesser, Global Chair of Boston Consulting Group. More ahead on the markets. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
This is Markets Today. We are 54 minutes into your European trading day. Across the European benchmark, losses of 0.1%. A couple of individual stories to bring to your attention. Some concerns coming through from Burberry, the luxury group, of course, listed here in the UK, warning that its revenue target is under threat on sales slowing. That stock then tumbling, as you can see, close to 9%, 8.8% currently. Siemens, very different story there. Investors cheering the balance sheet and cheering the move lower in terms of its debt holdings. It coming through with earnings as well. Siemens gaining, as you can see, more than 5%. HelloFresh, the biggest drop on record for this Germany-listed company, down close to 20%. The story around HelloFresh is that they have issued again a concern and a warning around full-year sales and EBITDA guidance. And finally, Hotel Chocolat here in the UK getting an offer from Mars, valuing the company at around £500 million, and that stock, as you can see, up 163%, so just shy of the premium being offered by Mars.
Yeah, absolutely. A bit of execution risk perhaps being priced in there, not trading at quite the offer price, as you point out, Tom. It gets me thinking of the political resistance that we saw when Cadbury was brought up many, many years ago, and the political aftermath of that. Perhaps this one goes through a little, goes down a little easier, perhaps, let's say. Let's talk about where we are on the broader markets then. European stocks just a shade weaker today, but actually the German market trading higher, up by 0.4%. From a stocks sort of sectors perspective, 2/3 of sectors in negative territory, 1/3 going higher. Utilities the best gainer, though. Energy the worst performer, down by 1.2%. Let's talk about the Bank of England briefly. A lot more expectation then of rate cuts in the market than there was just 48 hours ago, and that's a nice way to start the conversation on the pulse. Megan Green joining us from the Bank of England Monetary Policy Committee. That TV interview, her first actually since joining the central bank, will be coming your way at 9:30 a.m. UK time. So stay with us for that coverage. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. and they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Joe Biden and Xi Jinping agree to restore high-level military communications as the Chinese president says Beijing wants peaceful ties with the U.S. With emerging signs of a softening labor market in the U.S. and sagging consumer confidence, we're also joined by Jim Bianco to discuss rates at a 22-year high and why he's bearish on bonds. And then on Bloomberg UK, our exclusive conversation with the Bank of England's Megan Green, her first TV interview since being appointed to the Monetary Policy Committee. So first thing is first, I'm really excited about our show coming up with our great guests, but we also need to look at what the markets are telling us. Now, for the moment, we're off the rally that we saw in the last couple of days. A little bit of a mixed picture. You can see the CAC 40 down 0.1%, the FTSE MIB and the DAX over in Germany and Milan, respectively, gaining 0.3%. Now, the euphoria over this potential pivot by central banks seems to be, of course, fading. A lot of the focus will be on data out of the U.S. later and then the latest corporate earnings, but also possible deals. So back to geopolitics, and U.S. President Joe Biden has described talks with China's Xi Jinping as the most constructive and productive they've had yet. Now, President Xi says China is ready to be a partner, and of course a partner to the United States, but the positive tone was also overshadowed by a comment that the U.S. president made to reporters.
And Mr. President, after today, would you still refer to President Xi as a dictator? This is a term that we used earlier this year.
Well, look, he is. I mean, he's a dictator in the sense that he is a guy who runs a country that is a communist country that is based on a form of government totally different than ours.
So that's the geopolitics. Let's also bring in now Jim Bianco. He's founder and president of Bianco Research. Jim, first of all, I'm so excited to see you in London. Thank you also for all the great chart analysis that you send us on a weekly basis. Where are we now? So there's the economy is holding up, but there are signs to the downside, and then the market is doing something else.
Yeah, I think the real question is are we going to have a slowdown or a soft landing or a recession? That has been the call for the last 18 months, and it has largely not come to pass. And I guess the question we have to ask is, why does the economy, to use Jay Powell's phrase, surprisingly resilient? Right. And I think the answer is consumer spending. The consumer continues to spend. Why does the consumer spend? I think we don't appreciate what happened in 2020. With the shutdown restart of the economy, people have a different attitude about jobs. They're more transactional about jobs. They feel like they can quit their job, they can get another job, so they're very comfortable with spending. I don't have to worry about being unemployed for a lengthy period of time. If I self-unemploy, if I decide to quit, I can get another job. So spending keeps coming and coming and coming, and the economy continues to stay resilient.
And until about 2 weeks ago, the bond market was responding by ever higher interest rates to that.
But so first of all, if we take a step back, is this on credit card or is this also money pent up during COVID where we didn't go out so much? Because if that's the case, then at some point it kind of dries out.
Yes, it's a little bit of both. I mean, we're still struggling to figure out how much post-pandemic excess savings we still have. Yeah. And most of the new research coming out is suggesting that there's a little bit more than we have. And there has been an uptick in credit card spending, but I think really it comes down to an aggressiveness by consumers that they are willing to spend revenge travel, or whatever phrase we want to use, because they're not concerned, at least at this point, that they're going to lose their job and that they're going to have to retrench.
Jim, I know you sent some great charts. We got one made actually looking at expectations for GDP in the third quarter of 2023 compared to what we're expecting for 2024. Now, what's interesting to me, Jim, is actually if you look at expectations, I mean, even in the last 12 months, they've been all over the place. And we're expecting a recession. You know, we have all these like mountain tabletop also kind of analysis.
Yes.
Like, how are you so sure that it doesn't get really ugly from here?
Well, what you've been seeing is this repeating pattern, because what the chart just shows is Q4 and Q1, that the expectations for GDP are being revised up and up and up. Yeah. This is maybe the 6th or 7th quarter in a row that this exact pattern has been happening. Right. When we look at the economy, out 6 months, we say contraction, possibly recession, and then in 6 months, it never happens, right. And then it's contraction, possibly recession, and it continues and it continues. And I don't see anything yet on the horizon that suggests that that pattern should change. The stock market's not down. I don't believe interest rates, even at 4.5% on the U.S. 10-year note, are at injurious levels for the economy. There's nothing that has yet broken, the old line that, you know, something breaks for the economy. That hasn't happened. We survived the banking crisis of the spring.
Okay, so if something breaks, where do you see it first? Because it is also odd, right? This is like CFA level 4, that you go from like 0.5 interest rates to 5% without anything breaking.
Yeah, it is, but you also have to remember that the 2009 to 2020 period was the abnormal period. That was QE. That was not only depress interest rates to 0, but in Europe and in Japan, take them to negative. So some of that 500 basis point rise, or maybe a majority of it, was just correcting the QE period, because we're not in a QE period, we're in a QT period. So some of that interest rate rise has probably been restrictive, but not nearly as much. What tells you something's broken? Historically, risk markets usually have a bad reaction, a very bad reaction to whenever you break something. They're not having a bad reaction, neither credit is or equities.
So, Jim, what do you expect to happen for maybe the markets to shift actually on treasuries or bonds in general?
I've been bearish on bonds for a couple of years. I believe the 40-year bull market ended in August of 2020, so we're in year 4 of a bear market. We've had a relentless rise of rates until about 2 weeks ago. I see this as a natural correction in that longer uptrend. This could still run another several weeks, this kind of sideways to lower yields. But ultimately, I think we're going to make new higher yields in the first half of 2024. And probably around 5.5% to 6% is at least now where I'd put the fair value for the U.S. 10-year. So it's got another 100 basis points to go. And my concern is the Federal Reserve is not raising rates because they say financial conditions will do the work for them. Well, that starts at 5.5% in the way that I look at it. The markets haven't begun that move yet. And then it could be potentially higher interest rates even from there. That's if necessary. So I do, think that rates are going to continue to move up.
Yeah, and so what does that mean for the economy? Again, and we've seen a dispersion credit. Does that just get worse?
Well, eventually you will get to that point where you get high enough that you will see a serious retrenchment in the economy. I don't think we're at that level here yet. But if you put rates at 5.5, you put mortgage rates in the U.S. pushing 8.5 or 9, they're about 7 3/4 right now, you might start to see even more retrenchment in the economy. You might then start to really open that discussion that the Fed hikes or rates go up until something breaks. We're not there yet, so that's why I think we have to go higher.
Jim, is China the big unknown? I mean, we're expecting it to be inflationary when it reopened. We haven't really seen that because there are so many question marks about their economy.
China is a huge unknown. We thought after zero COVID that there was going to be a boom in China. And in the first quarter, everybody positioned for it, and it never really materialized. So, yes, it has been somewhat of both on an economic front with its disappointment and on a political front because we've seen a lot of companies Google with their Pixel phone moving to India as one example of companies that I think are telling us there's too much political risk right now to stay in China. So yes, they do remain a giant wild card right now.
Jim, when it comes to financial conditions tightening, is there something that we're measuring wrong, or is it just that it basically takes longer time for interest rates to take effect?
I think what we're measuring wrong is what is the fair value of interest rates. The Federal Reserve, to use the Federal Reserve's measure, they think it's a 2% inflation rate plus 0.5% on top of that, which is what they refer to R star. I think that the inflation rate is more like 3.5, and that 50 basis points or 0.5% on top of that, given higher interest rates, more volatility, might be closer to 1%, so that the fair value might be closer to 4.5. Now, we're above that level, but that doesn't mean we have 300 basis points of restrictiveness, maybe 100 to 150, and that's why the economy is able to withstand that type of restrictiveness and why rates have to go higher.
Jim, thank you so much. So fun having you in London. Jim Bianco, their founder and president of Bianco Research. Now, coming up, Larry Fink and Tim Cook among the top executives to bag a seat at an exclusive dinner with the Chinese President Xi Jinping. We'll discuss the politics next. This is Bloomberg.
On the product may read made in the USA, but the sign on the CEO's door often says made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Now, relations between the U.S. and China have thawed somewhat following a summit between Presidents Joe Biden and Xi Jinping in San Francisco. Well, President Biden described their talks as some of the most productive and constructive yet, although he did maintain that Xi Jinping is a dictator when asked by a reporter. Now, for his part, President Xi said he was ready to be a partner and a friend to the U.S.
China never bets against the United States and never interferes in its internal affairs. China has no intention to challenge the United States or to unseat it. Instead, we will be glad to see a confident, open, ever-growing and prosperous United States. Likewise, the United States should not bet against China or interfere in China's internal affairs.
Now let's bring in Bloomberg's Rebecca Chun-Wilkins. Rebecca, has anything firm actually been agreed in San Francisco?
Well, I think for the US, there are these hard wins that Biden can walk away with. This agreement on fentanyl, the military talks, the resumption there as well, and potentially this dialogue in AI. although it sounds all a little bit airy-fairy, at least gives Biden the illusion of walking away with something from Beijing. But I think for Xi, the biggest win here is having this opportunity to shift the narrative, and he really has come across as somewhat kind of friendlier and warmer than I think, you know, many in hawks in Washington were perhaps expecting, particularly this speech that he gave to business executives at dinner, and seeing kind of so many high-profile US businesses keen to sit at that top table with Xi himself. He touched on this idea of panda diplomacy returning, and again reassuring the US, I think in the clearest terms I've heard in quite some time, that it doesn't have any intention to engage in any kind of hot conflict. And some of those comments were reiterated by Biden himself there. He really wasn't drawn on any questions over Taiwan, just reiterating the one China policy. And again, in the readout, we had that same emphasis that the US isn't planning to move away from that at all. And this Taiwan is that really big sticking point for Beijing. It's been very, very uncomfortable with rising scrutiny over its ambitions there, which of course has prompted its neighbors to ramp up spending and so on. So kind of, playing down the risks that China poses from that national security front has been really important. And it does seem that we have had some of that shift in narrative from both the US side and the China side.
Rebecca, thank you so much. Rebecca Wilkins there with the very latest on Biden and Xi. Now, coming up, a change at the top for Manchester United with a new chief executive and a widely expected new owner. So we'll discuss that with our guests. That's next. And this is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight, because this is really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready? Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Manchester United Football Club has confirmed that its chief executive, Richard Arnold, is stepping down after 16 years. Now, it comes almost a year after the club's American owners, the Glazer brothers, announced they were looking for a fresh investment. Now, a Qatari offer to buy the club was withdrawn last month. That leaves the British billionaire Jim Ratcliffe, founder of Ineos, widely expected to take a 25% stake in United. So what does this all change mean for the club? Well, with me in the studio are Flex, a lifetime Man United supporter who founded the YouTube channel United View. Good morning. And John Yetimoglu, Chief Investment Officer at Infinitum Partners, who is a minority shareholder in Manchester United. Good morning to you. This is exciting to have you both to try and see the different perspectives. So, John, what do you think of the deal?
Well, look, first of all, I'm a big Man United fan and supporter. I respect the history of the club. But, you know, for the sake of this interview, I'm just going to speak to, like, the semantics of the deal as a shareholder and not really as a fan. It's been one of the wildest, most bizarre takeover processes I've ever encountered as an investor. But it seems like something's coming to an end now.
Bizarre because there's a lot of emotion attached, and it's not only about the deal, or bizarre how?
Yeah, across all those fronts. You know, there's been tons of strategic PR from all parties. You don't really know what to believe. Yeah, it's just, you know, one party looks like they're going to win, and then, you know, the other party pulls ahead. So it's just been bizarre for that reason.
Yeah. Flex, what's your take?
It's been a very frustrating process from a fan's point of view. Fans feel like they haven't been well informed, as John just spoke about. One party would lead the race, then another party would lead the race, and fans feel like the Glazers haven't really been transparent during this process, which has led to a lot of uncertainty. I think that Manchester United fans would welcome the fact that there is change from the Glazer ownership. I feel like Manchester United fans understand that the Glazers have not run the football club to the best of its abilities and to the best that it can be. And with Richard Arnold stepping down, it is a welcome change at a structural level above the manager that needs to happen in terms of a whole restructure. And I think Manchester United fans will be very cautious with what's about to happen, but would embrace the small change or significant change that seem to be coming upon us.
John, if the offer is actually less than what the Qataris offered, I mean, should we block the deal?
Yeah, I mean, that would be a breach of fiduciary responsibility. We believe all shareholders need to be treated equally in pari passu. So can't favor one shareholder over the other, you know, whether that be Class A or Class B.
But in terms of financial, so what are you looking in terms of financial? Does the deal, you know, need to be as good as what the Qataris were putting on the table?
Yes, we believe that. I mean, for them to accept a deal lower than where the Qatari bid is, wherever that was, doesn't really make sense, right? A full takeover would have been what was ideal for fans, investors, and the club in general. But if you're going to do a protracted takeover, number one, the price has to be better. And then number two, there needs to be clarity given to both fans and shareholders on timing of when the remainder of the club is going to be purchased.
And I think John nails it right there, because if you're looking at how Manchester United is set up now, many Man United fans have felt that the Glazers have needed to leave the football club for a long time. You know, the lack of investment into the infrastructure. You look at the training ground, you look at the playing squad, you look at the stadium, and there was an option there that was a world record bid for a full takeover, a full buyout, which is what every Manchester United fan, I believe, in my opinion, is behind. And for the Glazers to not accept that, like John says, it didn't make a lot of sense. And if Sir Jim Ratcliffe is coming in as a minority shareholder, which is yet to be confirmed, but we believe that to be true, and he's only going to have a 25% stake, but he's going to get sporting control, what's the roadmap? Is there going to be a full buyout by a certain time? Are the Glazers going to be bought out by a certain year? There's still so much that Manchester United fans that feel that they're in the dark about.
Yeah, so you both feel that basically this deal has been badly executed?
Absolutely.
And so who's to blame?
The Glazers, in my opinion, as a Manchester United fan. I think that the Glazers have shown that they're main motivating factor, of course, is money. And if you are an owner of a football club, I understand that. Fans can understand that. We've seen many rich owners run football clubs correctly to the best of their ability, which, in my opinion, in turn generates more revenue. I think if the Glazers were really interested in making Manchester United the best it could be, they would reap dividends from that. They would really see a surge in revenue. They would really see a successful football team and would be at the top of the football pyramid. Instead, I believe, as personally as a Manchester United fan, they've allowed Manchester United to rot. I think they've allowed Manchester United to be poorly run, all in the name of course, their finances have been where they want it to be, and I think they've reached a point where they've realised that in order to take Manchester United forward, somebody else is going to have to put money forward, and that's why we're not seeing that full buyout. We're seeing a position where the Glazers are able to stay at the football club, and somebody else, i.e. Sir Jim Ratcliffe, is going to have to fork out his own money.
Do you agree with that?
Yeah, in a way. I also believe that Rain Group might have set expectations a little bit too high for the Glazer family when they were initially negotiating to be the advisor as a merchant bank. And look, I mean, Liverpool had just sold, and everyone was pretty excited about Premier League assets, and the market crapped out a little bit, and there was only 2 bidders. So, yeah, I mean, it's a bunch of factors, but obviously.
John, expectations were high. Was that because of Chelsea also, and how much that?
I mean, Chelsea. I meant to say Chelsea, not Liverpool.
Yeah.
Liverpool did take a minority investment, I think.
But it's Chelsea. Yeah. I mean, the takeover of Chelsea, did it kind of change expectations for owners? Full stop.
Absolutely, because Chelsea was essentially a fire sale, right? It was a forced sale,
right?
And for them to get a price that high, got other Premier League owners, and Manchester United is the marquee asset in the Premier League and probably the world as well.
Flex, in 20 seconds, your advice to Jim Ratcliffe if he has that 25% stake?
If Sir Jim Ratcliffe cares about Manchester United as much as he says he does, if he's a fan as much as he says he is, I understand he's a businessman, then take care of the football club, ensure that there is a full buyout and the Glazers are removed from the football club, and be transparent with fans. Let us know what the plan is and what the vision is.
John and Flex, thank you so much both for joining us. John Yetimoglu and Flex. Coming up, it's her first TV interview since joining the Bank of England's Monetary Policy Committee. Our exclusive conversation with Megan Green. That's next, and this is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising New York City?
The mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
is not optically brilliant for the Prime Minister, but we'll have to see whether the impact can be something that actually damages him.
Joe, do you think the impact could be longer lasting than we think this week?
Be facing criticism from the right of his party, saying, why aren't you just going ahead with it? Why don't we just defy these international agreements? Why don't we just leave the ECHR, leave the UN Refugee Convention if necessary? He'll be constantly facing that demand to just do something, and that's already happening. And as long as things aren't happening, that pressure will continue.
So, Joe, what do we know about how David Cameron will run foreign policy? He's in Kyiv today for his first trip abroad. Do we know what he's trying to achieve? Is it messaging? Is it actually just optics? And what does he do next?
Yeah, I think it's optics. It's having that elder statesman figure in the role, allowing Rishi Sunak to focus on domestic politics, you would say, ahead of an election, having that trusted figure there to represent Britain on the world stage. He has those warm relations with world leaders that he built up when he was Prime Minister. He's a respected figure internationally. But as you mentioned in the introduction, there are some questions about things like his ties with China, things like the work he did with Felix Greensill, and we're expecting there could be transparency declarations that might come, which could cast further light on those connections, which might be problematic for David Cameron. But for the time being, Rishi Sunak clearly thinks that he's more of an asset to have than not.
So, Joe, overall, what does the Prime Minister want the relationship between the UK and China to be? We were also just looking at images, of course, of Presidents Biden and Xi meeting in San Francisco.
Yeah, so the mood music recently has been to increase warmer relations with China, while there is that still very sceptical wing of the Conservative Party, which sees China as a security threat and so on. But perhaps growing those commercial ties, perhaps doing more trade and so on. And indeed, David Cameron has been linked to those China ventures in the past. He has had, when he was Prime Minister, he talked about the golden era with China. So I wouldn't be surprised if we see like a thawing in relations between the UK and China after Cameron's appointment, and that would be in line with what Rishi Sunak's government's been doing recently.
And I'm sure after the pretty tumultuous week in UK politics, Rishi Sunak is expecting or hoping for a quieter week next week. What's on your radar?
Next week will be David Cameron certainly, and Sunak will be looking to see some stability in the Middle East. It's obviously apart from China and Ukraine, where Cameron's gone for the first time, the issue of the ongoing war between Israel and Hamas is taking up a lot of international kind of bandwidth, and there was obviously debate in the Commons last night that saw a little bit of embarrassment for Sunak's opposite number, Keir Starmer. So the international focus on what happens there is going to stay very much in the front line for the new Foreign Secretary.
Yeah, and Joe, what can you tell us about this Labour rebellion? Is it a big, is this like, should it be a real concern for Keir Starmer?
Yeah, it was quite a moment for Starmer. I think his line was consistently, this is about leadership, and what I will do if I became Prime Minister is, stick to my position, and that's what he effectively showed there. And I don't think it's an existential thing for Starmer at all. I think that this was an issue where people were critical of effectively the actions of the Israeli government. They're not necessarily having a go at like Starmer himself and what the Labour Party is doing. So, yeah, it wasn't as existential, but it showed that there is appetite for rebellion on the Labour benches, and that could become a relevant factor in the future if they were to be in government, and that's something that Starmer might have to deal with, if he's Prime Minister in the future.
Yeah, to both of you, actually, but Joe, let's start with you first. Does Rishi Sunak think David Cameron is an asset as we get into the election? So again, is he using for policy, or is it because he's, a popular figure with certain Conservative Party members?
Yeah, I think David Cameron brings a certain vibe, effectively, which Sunak sees as valuable, and that is one of projecting a kind of moderate conservatism that was effectively popular enough to win the Conservatives' elections in 2010, hung Parliament in 2010, but winning a general election in 2015, and appealing to that kind of more southern liberal centrist voter, which the Tories are in danger of losing at the next election to the Liberal Democrats. So having someone like David Cameron there probably shores up that vote quite nicely. But David Cameron has always been more popular than his party, and that is still the case. So, yes, I think Sunak sees him as that electoral asset, essentially. And again, as you mentioned, elder statesman figure, bringing credibility to his administration. I think that's the vibe he brings, which Sunak values.
Thank you both for joining us, Joe Mays and Adam Blenford. Now, coming up, of course, first, another reminder to subscribe to our podcast, In the City, and then we'll have plenty more on UK politics, on the UK economy, and we'll talk about Bank of England rates expectations. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
The tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The Biden-Xi meeting delivers small wins and promises of better ties.
Whatever stage of development it may reach, China will never pursue hegemony or expansion and will never impose its will on others. China does not seek spheres of influence and will not fight a Cold War or a hot war with anyone.
Target CEO sees great resiliency in the face of mounting challenges for the consumer. Up next, rival Walmart takes the spotlight and traders weigh the gains on weak U.S. inflation data. Are they overdone? Larry Summers warns against a rush to declare the Fed's job is over. A very good morning, and indeed that is the message from the bond markets, which is curb your enthusiasm. There is a moment of reflection. It's too early to call this massive pivot that we discussed 24 hours ago. We bounced by 9 basis points yesterday. We give a couple of pips back this morning. This is not 1995. 24 hours ago, the macro compass were with Danny and I, and they said, be wary of this soft landing narrative for 1995. Larry Summers warns that it's premature in some of the declarations of victory. And even Dan Everson yesterday talking about too much enthusiasm for 2024 rate cuts. And everything is just short-term noise. No, that's not me at the board. Bitcoin gives a little bit back this morning. It's been a splendid run, up 129% so far in 2023. It's skirmishing around the 38,000. It's finding it hard to break through there. That we last saw that level in May 2022. But this whole sort of risk-on rally that you had yesterday, giving a little bit back yesterday. Now, the dollar is the classic row-row, risk-on, risk-off, and we had that calamitous drop post-CPI. It had had its biggest one-day drop of 2023, off by 1.3%. But of course, the notes are coming in. T. Rowe, Fidelity, all see the dollar rebounding as the market reflects on rates, relative growth, and guess what? Guess where the dollar is? A haven. Danny, good morning.
Good morning, Manus. Who would have thought? I got to say, yesterday seemed pretty boring compared to Tuesday, but it wasn't a boring day, right? You had that reversal in bonds, but stocks were able to just barely hold up. Well, they're unable to do so this morning. S&P futures ever so slightly down about 1/10. NASDAQ falls about 0.25% off the back of 2 disappointing earnings from tech companies. We're going to get into this in a little bit with our reporter, but both Cisco and Palo Alto earnings biting and dragging down NASDAQ futures with them. David Costin over at Goldman Sachs says stay invested, do not sell. U.S. stocks will get back to new highs in 2024 because we won't be entering a recession. Meanwhile, Asian equities also give up some of the gains that they saw yesterday. Down 1% is where we ended on the CSI 300, Manus. Perhaps a little bit of disappointed. More didn't come out of Xi Biden. At least that's what the headlines are saying. Maybe it is, again, just selling some of the gains from yesterday. But, Manus, one of the things we're going to be debating throughout the show are what the retailers mean for the entirety of the American economy. Now, Target was really telling. We're going to talk about this, too, throughout the show. Really strong earnings, at least in terms of a rebound in destocking. But there were hints that the consumer is looking weaker. The CEO, Manus, said on the earnings call, consumers are still spending, but pressures like higher rates, resumption of student loan repayments, credit card debt, reduced savings have left them with less discretionary income, forcing them to make trade-offs in their family budgets. That's not exactly a booming consumer, Manus.
No, it's not. And I would say to you that that sales drop, everybody's making hay out of the destocking story within Target. But if you look at the sales drop, it's the second worst since 2009. And what happens after those student loans begin to kick in? Do you see higher defaults, perhaps on some of the lower rated credit cards? We're going to discuss hard and heavy on this retail. Target, of course, sets the table for Walmart. Haven't found the Walmart store yet. You can send me a pin for that on the IB. Danny, let's talk about the story. It's the US-China relationships. Has it thawed somewhat following the summit between Presidents Joe Biden and Xi Jinping in San Francisco? The two leaders agreed to continue communication.
In the months ahead, we're going to continue to preserve and pursue high-level diplomacy at the PRC in both directions to keep the lines of communication open, including between President Xi and me. He and I agreed that each one of us could pick up the phone, call directly, and would be heard immediately.
So we've assembled the team. It's 5 a.m., 5:04 a.m. in New York. And Karen joins us from Washington, up early. Alan Ward staying late for us in Shanghai. Let's take it to you first of all, and you are in Washington. You know, if we look at this, it was all going so well until Joe Biden basically called Xi Jinping a dictator. But we'll come back to that. Small wins and promises of better ties. Where was the biggest win for Biden?
Well, the 3 areas that the White House are highlighting is, of course, the agreement on fentanyl, the idea being there that China is going to curb the flow of fentanyl into the U.S. Secondly, you had, of course, the idea that the military will start talking to each other again. That's all about avoiding any kind of unnecessary accidents. We've seen some of those close encounters in the South China Sea over the past few weeks. And then the third one is a bit more vague, but they're talking about looking for areas of cooperation around AI. I'd say of all of the small agreements that they did carve out, those are the top three. But the biggest takeaway that the White House is pushing is, look, both sides are talking, and that's certainly that's certainly progress compared to where they were even 6 months ago.
Alan, one of the better moments of this is when President Biden showed Xi Jinping an old picture of him at the Golden Gate Bridge, saying, do you recognize this guy? Xi saying something about how it was 38 hours ago. It felt like a very warm meeting. What do you make of again, the relationship that we saw between Xi and Biden in San Francisco?
Well, the relationship is, is a lot, it's improving quite a bit. And we're just talking about what Biden got out of it. In terms of Xi, broadly, he got two things as well. One was he wanted to be seen as a global statesman. And the second thing was, he was seeking maybe some U.S. deals to boost the Chinese economy. And you have to understand, in the West, Xi is perceived quite negatively. And he's often seen as a dictator, that's what Biden said, and as a strongman. But here was an opportunity for him to sort of change that dynamic a little bit. He talked about, instead of using communist speak, he talked about, not wanting war, cold or hot, wanting to be friends. And like you said, talking about the history of U.S.-China relations, all the way from, the Flying Tigers during World War II to, Xi visit to Iowa 38 years ago to their recent visit. And on the second point, the economy, it was very important for Xi to seek to ease foreign investor concerns about the Chinese economy. There's not a coincidence that a lot of the biggest investors in China were sitting at Xi's table, from Apple, Blackstone, BlackRock.
Yeah.
We didn't get a lot of details on how they're going to, sort of ease some of these foreign investor concerns. It's important that Xi spoke about, de-escalating conflict. I'm sure that.
Well, Alan, just hold that thought because it was a bit like getting a ticket to Charlie and the Chocolate Factory, wasn't it? In terms of getting into the White House. And let's bring it to you, Alan. You brought it up. It wasn't. Well, maybe it was supposed to happen. Maybe it wasn't. But of course, it was President Biden's comment on who he was actually hosting for the 2 days. Let's take a listen.
And Mr. President, after today, would you still refer to President Xi as a dictator? This is a term that we used earlier this year.
Well, look, he is. He's a dictator in the sense that he is a guy who runs a country that is a communist country that's based on a form of government totally different than ours.
So, Enda, how did that go down in Washington? Was that supposed to happen, or was that one of the classic off-the-cuffs that just seems to have, it could spoil the theatre that we've had?
I think it shows, Manus, how fragile this whole detente is. President Biden began the press conference by making these remarks last night that he just had the most productive and constructive conversations he'd had with Xi ever. And, of course, he has known Xi Jinping for a long time. That's how the press conference started. And, of course, like you say, it ended with President Biden making those remarks about Xi Jinping being a dictator. And just like, if you remember back a year ago when they met in Bali, that was a great reset. China relations are back on course. And, of course, a few months later, we had the balloon. And I think that's why the confidence coming out of these talks are still fairly low. Yes, it's very important that both governments are talking to each other again. Both are emphasizing the importance of avoiding accidents and escalation. But it just shows you how fragile everything is.
I want to go back to the golden ticket to the chocolate factory. I got to say, the meal sounds pretty good. They had seasonal vegetables, a champagne vinaigrette, black Angus flat iron steak, and a vanilla custard tart. I know that's what Manus is going to cook me for dinner when I come visit him in New York. But Alan, you said there were scant details. Did anyone get anything out of this? Have we heard anything about the outcome of the dinner?
Well, no. That's the thing about it. The devil's in the details. Obviously, Xi would want the U.S. to roll back the trade tariffs, to get rid of the tech curbs, the sanctions on entities, and we didn't get any of that. Although I did see on the wire that there's talk of tech cooperation, whatever that means. That's quite vague. But, we're going to probably know more in the days and weeks ahead whether or not China got much more out of it, besides the fact that, they lowered tensions, which is good if you want to try to get foreign investors to return to this country.
Let's just circle off. I know everybody's fascinated to know what happened with the pandas. They're coming back, and you'll be glad to know Irishman left China, gone to Washington. The pandas are there. You go. This is Panda Cam history. There you go. The pandas. So cute. But on a we go for cute moments at 5:10 a.m. on Bloomberg Brief. But on a slightly more serious note. And you talk about the frivolity of these relationships. They did not mention Taiwan. Xi did not mention Taiwan, but he doesn't want a hot war. This is going to be a relief, I think, to the world. Is this the kind of off-ramp that the world should be grateful for? Because the ministry go on to say, China will realize unification. It is unstoppable. So the ministry has one view, and of course, Xi's telling us another message. Should we have relief overall, not just for Panda Cam coming back, but for Taiwan?
Well, it sounded like both sides were reaffirming their positions on Taiwan, which, to your point, Manus, was at least they weren't escalating. I mean, President Biden was noticeably reticent to comment much on Taiwan in his press conference last night. He just kind of restated Chinese policy on it, and he said he doesn't want China interfering in the election there. Of course, there's a lot of, as we know, going on in Taiwanese politics at the moment, and the election's coming up in January. So it felt like both sides were treading water on Taiwan, maybe to see how that vote goes. But to your point, I do agree. It certainly didn't feel like either side was looking to ramp up the mood music when it comes to Taiwan tensions.
I just want the return of panda diplomacy. Manus, can you send me that link of those panda videos?
I just want the cake that you mentioned that they had at the end of dinner. That's all I want. Thanks.
Okay, you give me the panda videos. I'll find some vanilla custard tarts for us. Hey. And Alan, we'll send them to you too. Thanks for getting up early and staying late for us. Enda Curran in Washington and Alan Wan in Shanghai. All right, let's get you some of the other top stories that are trending on the terminal this morning. The U.S. Senate overwhelmingly approved a temporary funding measure to avert a government shutdown. The measure delays a partisan clash over spending until the new year and leaves out emergency aid to allies Ukraine and Israel.
Well, President Biden defends Israel's decision to send forces to the Shifa hospital, saying Hamas uses the facility constituted a war crime. Biden added that Israel had taken precautions to limit civilian casualties in the incursion.
Value Act has become the second activist investor to amass a stake in Disney. Shares of the media and entertainment giant rallied on speculation that yet another activist investor might accelerate shareholder-friendly moves. Manus.
Coming up, Cisco and Palo Alto networks falling on surprisingly weak results. We track the tech next.
And later in the hour, we're going to talk retail results with Christina Morales, senior equity analyst at Punto Research. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Cisco continues to plunge in the pre-market on a disappointing forecast. You also had Palo Alto falling after its billing outlook missed estimates. The two were the S&P's biggest decliner after the bell yesterday. Joining us to discuss is Bloomberg's Alex Webb. So, Alex, it's brought down the entirety of the NASDAQ with it so far this morning in the futures trade. How much can you look at Cisco, for example, and say this is a Cisco issue or this is a wider tech services issue?
I mean, I think it is a Cisco issue, but obviously it's not the only sort of company that plays in this space. This is about essentially network infrastructure, and they are seeing a slight slowing down in customer spending. That doesn't mean we're seeing a broader slowdown in customer spending. There are a lot of cloud operators who are still doing very well. There's been a constant dance, really, between cloud and on-prem operations. And there was a suspicion that people were bringing stuff back into their own servers, their own networks. It looks now maybe as though there's another swing back towards the cloud. That could well be driven by AI, where a lot of these AI operations, you've got to be running them on Microsoft Azure or AWS. Mm-hmm. And so it certainly looks as though Cisco isn't benefiting from that right now.
It's interesting. The CEO, he said the macro economy hasn't got any worse. So you've got to sort of take these comments, I suppose, at face value at the moment. Can we pivot to Palo Alto? Because Palo Alto, I mean, it's very zeitgeist. I mean, we had this outage with ICB this week, moving their treasury trades around the city on a USB stick. But this, of course, is a cybersecurity company. They went on an acquisition spree. What did their numbers tell you? What's the nuanced difference between Cisco and Palo Alto?
Yeah, Palo Alto Networks, as you say, big cybersecurity player. You'd think right now there's a huge amount of attention being paid to cybersecurity. Companies are realizing this isn't an optional thing to spend on. The nuance here is really to do with interest rates. It's to do with, and the miss was particularly on billings, like what sort of their order book looks like. The CEO is saying that actually the value of money is what is affecting them. Presumably, the way I read that anyway is that because there's a suspicion that interest rates might start to come down, it means that then companies, the customers, are more likely to go for shorter term orders. They have shorter term contracts with the hope that then if interest rates do change in a year or so, then they have an opportunity to renegotiate, and it's a way of managing their costs. So that is the rationale that the CEO seems to be giving for this miss.
Alex, finally, before we let you go, I mean, poor Disney, it seems it can't catch a break from activist investors. A new day, a new activist investor.
Yeah, it's interesting, though, because the one thing that we don't really know what value act this new investor that's come into Disney, joining Nelson Peltz, who's already in there. We don't really know what they want. The shares are up because with the expectation that this is more, they'll be pushing for more that's in the interest of shareholders. They have said they are not working with Nelson Peltz. So that may be actually...
the CEO is buddy-buddy with Iger, right?
Well, yeah, well, actually his wife is an actress, Jordana Brewster, who's pretty well known if you follow certainly the early Fast and the Furious movies.
I don't, but yeah.
Well, there's something for you to do on this cold weekend in London. That is something that actually could well play into Disney's hands. If you have a little bit of divide and conquer, of course it's going to attract management attention. Nonetheless, shares trading up because they see opportunity for more for more actions taken in the interest of shareholders.
Well, let's see what Bob's got to say about the new activist and whether he's in the mood to give them a seat. He doesn't strike me as the kind of gentleman that's going to throw away seats on the board. Alex, thank you very much. Alex Webb there with the very latest on your tech earnings. To Europe, some big moves. We've got Siemens jumping Danny this morning. The most since February. They had a strong report. They raised the dividend after a record year, but you've not been shopping at Burberry. There's a lovely store on Regent Street, Danny. Why have you not been in? Go on.
I'm not the only one, Manus, to be fair. I mean, that's part of what happened to Burberry. They had earnings, and they warned that the luxury slump put their revenue target under threat. I mean, they have their own issues, but we've also heard issues from Richemont. Basically, everyone except Hermes has been doing well. But Manus, let me confirm, I've also not been shopping at Hermes.
we're supposed to be agnostic on the brands that we buy. I can't afford. I mean, you go into Hermes to change it.
None of them.
No, you go into Hermes and you say, "Excuse me, could I change my tie, please?" And they just look at you as if as literally you've crawled in through the door, kind of thing. There you go. Customer experience is everything. Hotel chocolate. Barnstormer. Ooh. And this is Mars. Mars has pounced on hotel chocolate, 161% higher. Why, Danny? Because it's offering value. Apparently, we'll pay more for posh chocolates. Do you pay a lot for posh chocolates?
If I'm going to spend money on something, Manus, it's going to be chocolate. I think that is a fair encapsulation of my life.
Hermes to posh chocolates. There you go. We've got it all for you. 5:20 a.m. in New York, 10:20 a.m. in London. She gets a lie-in every day. Just saying.
Not too bad.
Just saying. Thank you. From New York. Good morning.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
It's Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, I just want to set the record straight. Surveillance does not have a monopoly on F1. I myself am a big F1 fan. And I was watching the opening ceremony for Las Vegas last night. I sent you the video. It's insane. It looks like Hunger Games. This is the splashiest, craziest, silliest F1 I've ever seen. And Manus, how about this? Tickets have been slashed in half of price for tonight's race and Friday's race. For Saturday's race, $807. It's now what it costs, down from $1,650. Manus, they billed this as some pricey tickets. Not enough people want to go.
And not only that, but Wynn Resorts had hoarded all of these rooms thinking they were going to massively send them out. By the way, you know, we're coming up to the Abu Dhabi Formula One. You can't get a ticket for biscuits at that. So it's interesting that have Liberty Media just expanded too far too fast. There you go. There's the Las Vegas track. Let's see how many people actually show up, because, of course, they have had other expansion in the United States of America, but was it a little bit too much too soon? Liberty Media, let's have a look at the stock. It's down on the year, down 13.25%.
This is the problem, Manus. It's going to be 5 degrees Celsius. I don't know what that is in Fahrenheit, I'm going to be honest. But 5 degrees Celsius, that's cold. I'm not sitting outside watching that, would you?
No, definitely not. I like to do it from the interior of a hotel. Let me just take you back to 2015. Jonathan and the team at Surveillance get to interview the Formula One people. I just get to go to dinner with them. So here's back in 2015. There you go. That's when I was young, a little bit trimmer, and it was at a very special event in Monza. So for all you Formula One fans, it was pretty cool to be down on the, just in case Jonathan's listening out the back there, in Monza, in Italy, looking at all the Ferrari stands, the red. Okay, we can take me off the screen now. That's enough. We've had enough of me. That's quite plenty. But it is a spectacular. But you love it. Can I sell you any merchandise?
I do. I do love it, but I am just an absolute loser and watch from my couch. I don't get to go have dinner with them in Monza. Manus, take me with you next time, please.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. The Biden-Xi meeting delivers small wins and promises of better ties. Xi vows China wouldn't fight a hot or cold war with anyone. Target CEO sees great resiliency in the face of mounting challenges for consumers. Up next, rival Walmart takes the spotlight. And traders weigh if gains on weak U.S. inflation are overdone. Larry Summers warns against the rush to declare the Fed's job is over. It's been a pretty boring Wednesday if you compare it to a very tumultuous Tuesday. I should have found a W word for Wednesday. I'm going to work on my alliteration. Anyway, we are looking at equities unable to hold on to gains this morning. S&P flat as a pancake. NASDAQ 100 futures, those are lower by a tenth of 1%. We're speaking with our tech reporter about this. It's Cisco earnings, it's Palo Alto earnings. Both of them have different issues, but what they show are businesses pulling back on some areas of spending. That weakness, again, filtering through to the overall market. Meanwhile, for China equities, down by almost 1%. Yesterday, Manus, they were high off the back of stimulus efforts coming from China. Maybe they wanted more out of the Xi-Biden meeting, or maybe it's just taking profit this morning.
I've had a little moment to think about your alliteration, which is what? Tumultuous Tuesday. Yeah, I got it. Tumultuous Tuesday, wobbly Wednesday. Yeah. And wobbly Wednesday was more
so good.
Yeah, you
so
see?
Good.
Syncopation, symbiotic. Let's have a look at the bond. Yeah, let's have a look at the bond market. We popped up by 9 basis points. We got far too enthusiastic, far too over your skis. It was a moment of reflection in the bond market. Yields come back to 4.5%. Don't forget the Fed were almost ebullient that you had rates at 5% because it was doing the dirty work for them. Larry Summers says it's premature to assume that you can declare victory. And I like what Dan Everson had to say over at PIMCO. Too much enthusiasm for 2024 rate cuts. So higher for longer is something that we need to reconsider. We'll do that with the guest. Bitcoin, I mean, why not? It was a risk on pretty much everything, and Bitcoin joined in. It genuflected to the row that we had. It traded up towards $38,000. You're looking at Bitcoin giving back 0.6%. It's rallied 6% in 24 hours. And again, I mean, I'm exhausted. Let's wait for the ETF hope to turn into reality. And when that comes, maybe that will rejuvenate the market. The dollar had a pretty tumultuous Tuesday when it tanked like a stone on the back of CPI. It had a very hard landing, down the most in 2023 by 1.3%. It continues that little bit lower. The hedge funds are the longest in 8 weeks. They've been building long positions in this dollar for 8 weeks now, and that's still not very long. Don't forget, Monday morning, Union Bancaire sat down with us both and said it's about $8 billion, but it's not that long in their opinion. Danny?
I'm still thinking about Wobbly Wednesday. I love that so much, Manus. It's so good. It's so good. Okay, the other thing I have to say I love is this recent note from David Kostin over at Goldman Sachs. I'm just going to read it, Manus. Go. But it's about this idea that stocks might flirt with new highs in 2024. The team wrote, at this time next year, portfolio managers will look back and realize the best investment strategy for 2024 was to follow Taylor Swift's advice in the song from her album 1989. All you had to do was stay invested. Manus, does David Kostin really listen to Taylor Swift, or did some poor intern have to dig this out for him?
I'm not even going to dance on that thin ice. Yeah, you're not wrong. Well, maybe David Kostin does listen to Taylor Swift. I mean, we talked about Taylor Swift inflation impact. We talked about Taylor Swift's impact on employment. And there you go. It's hit the zeitgeist of Goldman Sachs in the upper floors on why you want to stay invested. I'm with Goldman's.
Yeah, you can't understand this market unless you listen to Taylor Swift, apparently. Now, we did have the rally in treasuries this week. It's prompted some to wonder whether the market is jumping the gun. Former Treasury Secretary Larry Summers did not quote Taylor Swift, but he did caution that a recession is still not completely off the table.
It's certainly under 50-50, David. I think it's probably on the order of 25% that ultimately something will happen which will cause the NBER to date a recession as having begun in the first half of the year.
Let's bring in Marvin Lowe, Senior Global Macro Strategist at State Street. So, Marvin, do you have a Taylor Swift quote for us that explains this economy?
I was trying to think through this. Am I supposed to say something about shaking it off or something like that?
Oh, that's good. Marvin. That's good. We'll take that. We'll take it, Marvin. Okay, so then let me stretch the metaphor, Marvin.
Okay.
Let me stretch the metaphor. Do you shake off what this market has done? Pricing in cuts after CPI, a stock market rally. Have we gone too far?
Yeah, I think it has. I mean, certainly there was a lot of enthusiasm. I think that there are points in the data that we released, that we saw, which are encouraging. But to kind of get from what we had earlier this week to, you know, really an all-in soft landing type of scenario is just too quick at this point.
You say that it will be elusive to deliver a soft landing. It's interesting because we had the macro compass with us yesterday, Alfonso Picatello, and he also said, look, it's elusive. This is not 1995. In other words, going into 2024, it's not 1995. You're not going to have a soft landing. So we're not going to have a soft landing, Marvin. What kind of 2024 are we going to have? Is it truly higher for longer?
I do think it's higher for longer, and I think that the soft landing camp has something to grab hold of. Certainly there's strength in the economy. Retail sales was not terrible. It showed that the consumer is still engaged, even though prices are coming down. So, we're seeing all of the pieces that let people get to a concept of a soft landing, but that last mile on inflation is also challenged by kind of that same soft landing type of discussion. So the Fed remains higher for longer, and the credit tightness gets even tighter, and ultimately that does create a harder landing in my mind once it becomes clearer.
But if we stay in a market environment like this, where it doesn't start to price in higher for longer until we actually get to that point, is the market working against the Fed? Do we now have easier conditions thanks to a bond market rally, thanks to an equity market rally that undoes a lot of the work of the past few months?
Yeah, absolutely. And that's a wonderful observation because, a few weeks ago, the Fed was talking about a 5% yield is helping them in the process. A lot of that was term premium driven. And all of a sudden, we've reversed all of it. We're kind of back to levels that we haven't seen since the beginning of October, when they started saying that they were comfortable that these higher yields were going to do work for them. So it's a little bit circuitous from the market and the Fed perspective. I do think that it's a trading environment. Remember that even if the Fed is not raising rates anymore, we've got QT going on, and that's tightening conditions. And that still, I think the bulk of the QT
but Marvin,
process.
That QT, and I accept that and I respect that, and everybody talks about QT in the background, but at the same time, you've got the Treasury issuing bond after bond after bond after bond to pay an interest rate bill of $1 trillion. So the Treasury's pushing back against everything that the Fed is doing, and this is a moment where Powell, it was a cry from the heart on October the 19th. The fiscal situation cannot continue.
Yeah. So for sure, but remember, if QT is still operating and the government is issuing even more debt during that process, it means that there's more credit that has to come out of other parts of the economy to buy those bonds because the Fed isn't buying. So you actually get the double effect, I think, of even tighter conditions when you've got a very robust government issuance calendar where the Fed doesn't have the ability
so long as we don't get indigestion.
QT.
So long as we don't get indigestion. So long as we don't get indigestion. Sorry, Danny, go ahead. I just have to riposte.
Well, I mean, no, but that is where I kind of wanted to challenge on that front too, Marvin, because the Fed is the buyer of last resort. Can QT continue if we do have this huge issuance that starts to rock the bond market?
So I do think that there's a hope in the market that kind of slowing growth is going to allow the Fed to start the cutting process and stop the QT process. I think that is packaged in the back of folks' minds because, generally speaking, there's a view that they can't continue to shrink the balance sheet while they're loosening conditions. It's just too hard for an economy this large. The challenge with that is there are inflationary aspects with the balance sheet remaining as large as it is. It's something that's not necessarily focused on. And if they can't right-size the balance sheet, they wind up with problems going into the next cycle and ultimately what they could do.
So let's tie a bow on it to steal one of Danny's phrases. You like cash, so I'm going to get 5% in cash. And yet we've had people come in through the door this week with us and say, oh, the curve steepeners are way too crowded. So you want the larder to be stocked and full of cash. How stocked and how full of cash do you want it to be?
So I think that as we go into next year, with all of this that's going on and higher for longer, bonds are going to outperform stocks. So I'd look at a cash bond overweight relative to stocks, particularly given what we've had in the last couple of years. Early in the year, I'll keep more cash as part of that allocation. And as we get into the later of the year, I'll start extending duration to kind of take advantage of a much clearer path with regard to a Fed that will have to ultimately start to normalize, but certainly not as aggressive as the market is saying right now.
Marvin, what do you make of some of the retailers we've heard from so far? The earnings were at least well received in the case of Target. Home Depot maybe not, but Home Depot talked about consumers not buying big ticket items, buying more smaller projects. Target talking about issues of higher interest rates, student loan repayments, making families make one-off trades, making them push back some of their big purchases. Do you take that and say, okay, maybe there is more weakness coming in the consumer than, for example, the retail data yesterday showed?
Yeah, there is for sure. So when we look at retail sales from a real perspective, adjusted for inflation, volumes are still declining, and retailers certainly need higher volume to kind of get to the numbers that they want. The consumer is tapped. We're seeing goods deflation. Our online price stats tool, which allows us to kind of look into real-time inflation, particularly on the goods side of things, continues to see that goods disinflation, deflation continuing. So, I do view the consumer as tapped. It's just very, it's choppy now. Some people still have money. They're able to still spend. But clearly, some of the discounters are benefiting from it. You've got, with regard to Home Depot, you've got a lot of housing turmoil, if you will, with regard to how upside down the U.S. housing market is. And you need to be nuanced from that perspective.
It's amazing how we vaulted, Marvin, this week, isn't it? A 20 basis point collapse on the back of the CPI, the PPI helped reinforce some of that narrative. If you look, you talk about an elusive soft landing, 2024. That then begs the question of where are you on rate cuts? The Fed is at 2 rate cuts for next year. UBS is at 275 basis points in 8 months. I call that a mother of a spread. Where are you on that 50 bid, 275 offered? Make me a price.
I'm on the Feds, and I'm actually taking the short side of the Fed. I think that we're going to have less cuts than what the Fed is even expecting now. Remember that the Fed has one more hike kind of built in, if you will. So they're not going to be able to hike. They don't need to hike. They really want to avoid a recession, because remember, a recession, well, number one, every central bank wants to avoid a recession, and that's kind of a good goal. But if we do get a recession, we get even more debt. And I think that that's a challenge that the Fed, in the back of their mind, wants to avoid. So higher for longer is an attempt to get the balance sheet right-sized, avoid a recession so we don't get a lot more debt that they ultimately have to buy, and really deal with this last mile of inflation, which, we had good data moving in the right direction. That last mile still remains elusive.
So, Martin, just again to clarify, does that mean the likelihood is no cuts next year because they need to keep unwinding the balance sheet? Because presumably they can't do QT for all of 2024 and also be cutting.
You know what? I would lean on that side. Whether or not we get 1 or 2 cuts at the end of the year, because they've been able to get through the bulk of the balance sheet shrinkage, which is still probably $1.5 trillion too large. So at the pace that they're going, they would need the better part of 24 to get it to a point where financial transmission works a bit better.
Marvin, thank you very much for joining us this morning. That is Marvin Lowe. We hope we kept you entertained there with Taylor Swift. We cover everything. We're a broad church on Bloomberg Brief. Marvin, thank you very much. You're a good sport. Quick snapshot of the bond markets. It's been a heck of a week. You just heard there from State Street. They don't expect as much of a rate cut, indeed, as 50 basis points next year. QT will continue. Rates drop ever so slightly this morning, 449. A break of 450 is important in the mind. And yields drop ever so slightly in the United Kingdom, 4.16, right here on Bloomberg from London and New York. Good morning.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Sports and money, they've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
It's Bloomberg Brief. I'm Menace Cranny in New York. Danny Berger alongside me in London. The retail sales, they're underway this week, and there's still more to come. Macy's and Walmart and Gap all report before the bell. Joining us now is Christina Morales, Senior Equity Analyst at Punto Research. Christina, thank you for getting up early. Straight to target, which part of this report are you more convinced by? The inventory draw or the sales drop? 4.9%, the second straight quarterly drop and the worst since 2009. Are you heartened by the inventory draw, or are you concerned about the sales drop?
I am very optimistic about the inventory drop. It was actually a very important thing for the company. As you remember, during the pandemic, the inventories went up very high to catch up with the new demand that the pandemic was coming to catch up with that demand. Then suddenly, very fast, the consumer dynamics changed, and the company ended up with a very high level of inventory, basically discretionary inventory, and that brought the margins down very fast. Then the company had a large way to go with that inventory and the margin erosion that brought. And they focused on what to do with that profitability and what to do with that margin erosion. They have gone a long way with that. They are very laser focused on improving the margins via inventory management, and they're achieving that very fast.
So then, Christina, because you're talking about very target-specific things in terms of their inventory. I'm looking at a Walmart that bounced yesterday 1 1/3% on those Target earnings. How much, if any, read across is there from what we heard from Target to this morning's Walmart results?
Yes, well, actually, it's a very different story because the discretionary items for Walmart are not very high percentage as in Target, so they're not having that much trouble with the inventory. They had a high problem, but not as much as Target, so they're not struggling that much. I can expect an improvement in margins for Walmart later on, probably increasing gross margin, increasing in operating margin, but it's not like that that important, the inventory management, as it was for Target, because they have very everyday low items selling and not as much as Target, the discretionary part.
Christina, if we stand back in this retail season, there's some big themes we need to understand. Whether shrinkflation is at its end, and whether greedflation, in other words, these corporates pricing within an inch of their lives, Coca-Cola up 10%, I think Netflix, we had a price rise as well. You can call it various things, various people call it greedflation. Are we at peak pricing power of these retailers, first of all?
Well, the inflation has definitely decelerated, but consumers are still facing very high prices. For example, there are some products that are still 30% up in prices compared to a year ago. And I don't know if to call it like the greedflation per se, but still the cost structure is higher than before the pandemic, even though there are costs that are down compared to pre-pandemic levels, like all the related to the supply chain costs and freight costs, and all of them have gone down like from a year ago. But the cost structure per se is higher than before. So the prices have to be a little bit higher than before in order for companies to maintain their profitability levels.
Okay, well, we'll see what this morning's Walmart and Macy's results bring. Christina, thanks so much for getting up early and joining us. Christina Morales of Punto Research. Now, coming up, Manis and I have a look at some of the market-moving events for you to watch throughout the day here on Bloomberg.
Let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
It's Bloomberg Brief with Danny Berger in London and Manish Cranny in New York. Let's get you set up for your trading day. Here's a look at what's ahead. ECB President Lagarde speaks at 6:30 a.m. Eastern. Then it's another Fed Speak marathon. We have Barr, Messer, Williams, Waller, and Cook all on deck. It's also a big day for retail earnings ahead. We're going to get results from Walmart, from Macy's, Applied Materials, plus Alibaba should report earnings in the next hour. Then back over in San Francisco, we're going to hear from a host of C-suites at the APEC Summit. Jane Fraser, Sundar Pichai, Mark Benioff, and Elon Musk, all of them are expected to speak. So the news isn't over from SF, even though we've had the bulk of that Xi-Biden meeting, Manus.
Yeah, I mean, you know, the euphoria, you just got to wonder whether that Biden comment at the end of the press conference will touch on the fibrillity. I think I like the way it encapsulated how it was between China and the United States of America. It was very low base and very febrile. Now, what have we got? So Target had a barnstorming day yesterday. What will Walmart? You see, I've got to buy a TV, and the question is, where do I go to buy the TV? Do I go to Walmart? Do I go to Best Buy? Do I go to Costco? I just look at that, flat as a pancake. Walmart. What's going to happen with the inventory, Danny? I'm wondering.
But see, this is the thing. I think you wait to hear from their earnings as to whether you buy or not. If their inventories are really high, I think the move is wait until after the holiday season when maybe they have too many TVs and they're slashing their prices. I think that's the play.
I'm in the market. I mean, I'm learning a lot about televisions at the moment. I work in TV, and I had a TV that just sort of sat on a chair for 5 years in Dubai.
You literally work in TV.
Yeah, I literally work on TV. Hey, that's me. And let's talk about Cisco. Do you believe the CEO that the macro environment is not that bad? Higher for longer. So back to the board. What we got? We got a little bit of Cisco. Trashed this morning, down 11.5%, because in the end of the day for them, consumers went boom, boom, boom with the orders, and they're just slowing down. That's the bottom line for them.
Yeah, and we're still waiting for Alibaba earnings. I mean, that could tell us a lot about the Chinese consumer, how much shopping demand they have. What, are you going to talk about my Singles Day discount again,
I'm going
Manus?
to talk about their customer retention data. Danny Berger is off the market. She's not buying singles dinners anymore.
I still don't live in China.
Yeah, it's looking for a flat rise in sales at Alibaba. Surveillance is up next.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Consumers are still spending. And on top of that, you're getting some relief on the pricing side.
If they continue to spend and add to their debt levels, that could slow things down.
The trajectory over the longer run is that inflation should start to gradually decline over the coming months.
That resilient growth story can run. I don't think a recessionary threat is immediate.
I think we will slow, but I don't think this is an economy that's at any imminent threat of anything really bad happening.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance, live on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market on the S&P 500, slightly negative after another day of gains on the S&P 500. Just squeezed one out yesterday after the biggest day of gains since April, the previous day. TK, we should begin on the West Coast, playing Happy Families in San Francisco, California.
Yeah, and then there's some comments late in the press conference. We'll get to all that today, but pretty much on script. I mean, photo op, big fancy room they had to find. I thought it was in the movie Mank. Mank came out a couple years ago, William Randolph Hearst, and I thought, it's a set of Mank.
We're playing Happy Families. They reach for the thermostat. They turn the heat down. It's all good, TK. It's great. Good. China's even going to send the pandas back to American zoos. Wonderful. Perfect. Cosmetic level stuff, and then bang, he's a dictator. Well, the President of the United States, just kind of spoiling the party a little bit.
Just to put this into perspective, someone asked him, does he stand by his comments made several months ago that Xi Jinping was a dictator? And Biden said, well, look, he is. I mean, he's a dictator in the sense that he's a guy who runs a country that is a communist country that is based on a form of government totally different from ours. You know, here's the question. Does China take this up and actually run with it, or do they ignore it? That actually will set the tone for just how much they want to have this be a success, at least in the backward look.
The bar is so low for this relationship, TK, that I think it wouldn't take much to really jump over that bar. And we took a hop, a skip, and a little bit of a jump yesterday evening.
It was a little bit of a jump. I'm sorry. I would suggest it was all given back by, and I don't know the peculiarities of how the president addressed the dreaded D word, but I think it was, I have to believe, how offended can various and sundry people representing the Chinese be? And I know there's a lot of Americans like, well, we don't care if they're offended, but they're offended.
Away from that, let's talk about the business meeting that did take place. We can tell you who was on Xi's table, Tom, at the dinner.
Yeah.
Apple CEO, Tim Cook.
No surprise.
BlackRock leader, Larry Fink, Blackstone's, Stephen Schwarzman. Big table, Bramo, still going through the list. There's about 20 names on it, based on what I saw overnight. Do you think there's anything that the Chinese leader could say to these guys today that would make them invest more tomorrow?
I gave so much thought to this last night. I was thinking about that. Do you take promises? Do you take tone? Do you take happy families? Do you take the pandas that are coming back to you as zoos? Or do you basically say, essentially, we've seen what we've seen. We cannot be dependent on any.
Start with the equity market on the S&P 500. Equity futures shaping up as follows. Equity futures totally unchanged. Just about squeezed out a day of gains yesterday on the S&P 500 after a big move the previous day. Yields are a little bit lower, Tom. It's a break of 450. Dare I say you might have some stability at 4.5% on a 10-year.
In the yield space, maybe that's where we are, 4.5000. First thing I did when I came in, I didn't look at a chart today, folks. I looked at levels. I got Dow 35,000, 4,500 SPX. I'm not to 16,000 yet NASDAQ 100, but to your point, I think it's key yesterday that we held up off of the shock and awe of a couple days ago.
It's a quiet morning so far. The euro just about unchanged at 108.50. Bramo, the morning gets busier as the morning grows older.
And it gets busier with the consumer. And I actually think retail earnings matter more than ever this particular earnings cycle. We did just get Bath & Body, and we saw a bit of a miss on the full year forecast. We can go through that in a minute. We get Macy's as well coming up at 6:55 a.m. 7 a.m. we get Walmart after the bell, Ross Stores and Gap. It's important to see where we've come so far this year. Macy's shares are down 37% so far this year, the second year of double-digit losses. Walmart shares are up 21%. So how much do we learn with respect to the earnings about specific companies versus overall trends of a consumer? We'll get into that in a bit with a couple other names. 8:30 a.m. we get U.S. initial jobless claims as well as some housing market data at 10 a.m. How initial jobless claims have ticked up. The unemployment rate has steadily ticked up. If we start to see a real increase, a surprise in the initial jobless claims, I'm curious about the market reaction. Today, let's go through the Fed speak. I know you've been looking forward to it.
Poised.
We've got Michael Barr, the Vice Chair for Supervision, Cleveland Fed President Loretta Mester.
Retiring.
Yes, indeed. New York Fed President John Williams, Fed Governor Chris Waller.
Interesting.
As well as Fed Governor Lisa Cook. There is a Treasury market conference being hosted by the New York Fed today.
That sounds fun, doesn't it?
I think actually right now, a lot of people would say that this counts as fun because this is actually a huge dynamic in
Mary
markets.
Daly with Colby Smith.
Yes.
In the Financial Times yesterday, Tom.
Yeah, I saw that.
Interesting.
Yeah,
Too early to declare victory.
Yeah, I think she's I've said this before, she's my favorite Fed president. I think she's got a huge understanding of the fabric of America, and particularly in America. It's struggling. What I love about Bath & Body Works, and I know it's not a Dow component, but the beard and scruff cream there is, it's like the best.
That's what you go to buy?
The beard and scruff cream is...
Thanks for sharing that with us, Tom.
Thank you.
I appreciate it. Couldn't
It's our
live without
coverage
that.
of...
Can we check out Burberry just quickly? That stock is down by 9.4%. Over in European trading in London, down 9.4% because sales barely grew in the last quarter, and the outlook's not looking bright. Let's put it that way. 1580 over in London. Joining us now is Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Sophie, let's go straight to Burberry, and great to have you with us on the program as always. Does this signal the end of the post-pandemic boom? Yes. What are we returning to? Sophie, I don't know. What do you think we're going back to?
Hi, good morning. Yes, this is obviously the very big read this morning. Burberry really quite disappointing. And I think we can't necessarily conflate the entire luxury side of things to purely these results. Burberry has got a really specific set of challenges, and within that, opportunities as well. For Burberry, I think that we are going to be coming back to a lower base than pre-pandemic, to be completely frank. But within that, it's done a huge amount of work on its creative turnaround, repositioning itself at the higher end of that value chain. So that should cushion it slightly. But actually, I think when you look at product range, the breakdown of the demographic that they're going after, I think that there are, frankly, just a lot more challenges for them to clear. And that's why I think the growth runway does look a little bit more problematic to me.
Sophie, how does your outlook look for next year if we understand that each and every stock has a narrative, like Burberry? Everybody has an individual story. How do you coalesce those many corporate stories into a market call?
It's certainly a challenge. I can't really think of a time when there's been quite this much divergence as well, really. It's certainly a dynamic time, isn't it? I think for me, if we keep it within luxury, it's really, for me, it's going back to those old school tactics and understanding kind of the best in class offerings and breaking that down, because things have become so segregated, so polarized in a lot of situations. We're actually just saying, oh, this sector looks reasonably okay, or this sector looks reasonably challenged, is no longer good enough. So it's looking at best-in-class propositions, and always, as you know me, coming back to that valuation point and remembering that price is what you pay and value is what you get, and that is something that really cannot be forgotten, particularly as we head into next year, which I think is going to be really quite a bumpy ride, no matter where you look in the market.
Let's talk about where those bumps will come from. Is there any conclusion we can draw about which buyers are pulling back on the consumer space, affecting specific retailers, but not so much other ones?
Sure. For me, I think a particularly squeezed area is going to be those retailers that are in the middle of the value chain. And by that, I mean those that aren't super high end and those that aren't offering consumer discounts and extra good value. So that non-essential and discretionary spend is going to be really quite challenging. In the short term, there are some bright spots. I don't want to just come on here and be all doom and gloom. When we look at holiday spending, for example, we know that we're looking at a holiday spending pullback in probably mid-single-digit percentages, but within that, e-commerce growth is expected to come through the line, and there are particular retailers, Amazon one, I think is actually particularly well placed to capitalize on that in the short term. But broadly speaking, going into next year, those companies, you were talking about Macy's earlier, I think they're in a difficult spot. Those kind of large-scale physical retail estates that are offering kind of mid to higher mid-value options for consumers have got a really hard job on their hand to try and convince people to spend with them in a big way.
How much has already been priced in?
I think a lot of it. I think that the possibility of very sharp falls, obviously never a definite no, but I think they are probably less likely. But I think we could see an incremental creep downwards still for those names. And obviously, I do think in some situations, for example, I'm not entirely sure how sustainable Target's recent rally is, given their leaning towards the non-essential spend as well. So we could still see some corrective moves, but I think for me, it may be more like a creep downwards.
Sophie, it's interesting listening to you because over the last couple of days, all we've heard is happy talk regarding the equity market and a big year-end rally that's about to evolve over the next month or so. I don't hear that from you, Sophie. What do you like in equities right now?
Yeah, sure. I obviously need some more coffee. I'm just not in a good mood on the markets today, clearly. There are definitely some big opportunities. I do think that certain corners of luxury do remain relatively compelling. But looking at kind of maybe some slightly less exciting names for me, I think the telecoms, particularly some of the big names in Europe, have some interesting propositions. They're not the most exciting stocks, but that's why some of them are interesting. You know, those incredibly wide economic moats and those barriers to entry and that reliability of demand are all very exciting things to me in the current environment. At the same time, I think some of the big aerospace defense players also were looking at a lot of chatter around energy transition, particularly in nuclear as well. So you look at the likes of Rolls-Royce and some of the opportunities there. Again, it all comes down to those wide economic moats. For me, is where we need to be, looking.
Sophie, always enjoy catching up with you. Thanks for being with us. Sophie Lunchtime there of Hargreaves Lansdown. Just to go back to Burberry, Tom, down 9% today, down close to something like 20% year to date. It's been absolutely brutal. Remember what this year was meant to be? China reopening, consumers are coming back. Yeah. It's going to support some of these names. LVMH off to the moon, and then rolled it over aggressively.
And now there's going to be a separation out here. And I'm really not sure where LVMH fits into that separation out. There's others. We've got Deborah Aiken and Bloomberg Intelligence doing great work on that. My issue with it from a Burberry family a million years ago is real simple. In most of luxury, including Burberry, when I walk in the store, nothing fits. Trench coats? You'd think they'd have a trench coat that fits me.
Are you describing personal problems, or do you think this is a broader issue?
I've talked to Steve Sadov of it, who invented the word exclusive within American retailing at Saks Fifth Avenue, now at MasterCard in a senior position. And Steve says this is the biggest product miss of luxury, is they don't do triple zeros for smaller females, and they don't do the large thing. I just looked on the website. I got a trench coat all picked out, you know.
We've got the solution to Burberry stock. They need to make trench coats for men who are 7 foot, Bramo.
That's it.
That's how you turn it around.
Glad that we had value add this morning.
You loved my look at Jackson Hole 2 years ago.
It's a big
my
fan,
Burberry trench coat.
Who was that again?
That was Columbo.
From New York City, good morning. City.
In London, in Sydney,
From Washington.
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
Business's most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I believe these are some of the most constructive and productive discussions we've had. I've been meeting with President Xi since both of us were vice president over 10 years ago. We've made some important progress, I believe.
And Mr. President, after today, would you still refer to President Xi as a dictator? This is a term that you used earlier this year.
Well, look, he is. I mean, he's a dictator in the sense that he is a guy who runs a country that is a communist country that's based on a form of government totally different than ours.
The President of the United States speaking to the press after several hours of meeting with China's President Xi Jinping. You could just imagine Secretary Blinken's face, Tom, front row, as those words come from the President of the United States. I have to say, it's hard to argue against what he's saying, though, TK. Isn't it as close to a statement as fact that you can possibly get?
I would go back to 1949. I'm looking right now on the famous Bloomberg terminal. September 29th, 1949 is pretty much when you established an understanding of a form of government in China. We've seen that word used, but I don't think we've seen it used over fancy china and silverware at a get-together.
But you've got a leader now in China that is basically serving a life term, Tom. Can serve for as long as he likes.
And in Russia as well,
long as he
we
wishes.
should point out as well.
I mean, what is that by definition?
I take your point. You know, I really think you have to. I mean, you know, there's niceties. I mean, if you look at a holiday gathering at the Bramall House, I mean, there's just things that aren't said. Right?
Well, that aside, other than that, it was that warm embrace we all expected.
Yeah.
We were looking for a charm offensive from the Chinese leader because he's got obvious problems in the domestic economy. And Lisa, that's what we got in the last 24 hours.
And some of the most underplayed developments, I think, was the resumption of military communications, because this could avoid some sort of accident that a lot of people were worried about inside the South China Sea, could ignite some bigger conflagration.
No, we'll have to see. Years ago, at the Metropolitan Museum of Art, in their fantastic collection of clothing, you would walk down the stairs into the basement, and there standing at you was one of the very few fully extant uniforms of the Chinese Cultural Revolution, think 1968, and all that went on in the politics and tragedy of China. Wendy Schiller's expert at China, director of Taubman Center for American Politics, this at Brown University, and joins us this morning. Wendy, as far as I'm concerned, and I can't say I saw Madam Chiang Kai-shek speak to the House of Representatives, but we are living, whether we want to or not, our ghosts, our memories of what we think China was. Is China now what we think it was once?
Well, I mean, I think it's schizophrenic. You know, I think the great hope of giving China preferred trade status or most favored nation status permanently 20 years ago, more than 20 years ago, was that it would open up some political freedom and that it would become a more stable and more predictable partner to the United States economically and reduce the threat politically from China. We just haven't seen that kind of political freedom ever really develop in China. And instead, it became a gigantic, not only trading partner, but competitor, and some would say purveyor, let's just put it nicely, of American technology and creative ideas. So I think we are grappling with what we thought would happen. The Democrats and the Republicans joined together, kumbaya, to make this happen under Bill Clinton, and what's actually happened in that country.
Right.
And I think if there's great disappointment that there hasn't been a progression, a Hamiltonian progression towards
yeah,
more
but
political freedom.
well said. But Hamiltonian, Alexander Hamilton's not showing up for the debate. Either is John Locke. How much is Xi like Mao? He wants to be like Mao. I don't know who Putin wants to be like, maybe Peter the Great. But if you look at the memory that China has of Mao, how much do you see Mao in that dictatorship in the present China?
Well, this is really about not letting sort of global changes, particularly informational changes, access to technology, access to information, disrupt the sort of firm political order. But he's allowed far more freedom, you could argue, in life itself in China, in development. You know, you don't have to wear the same clothes as everybody else. Speaking of the luxury good market, right, in China, this seems small, but it's not small. Allowing people to think that they are living life as they want to live it, socially at least, or economically at least, gives him more leeway to tighten the reins on political power.
Did the meeting that we just saw transpire between President Biden and Xi Jinping help or hurt President Biden's re-election campaign?
Well, you know, we're all counting down exhaustingly to the election that is a year away. But I thought he looked pretty good. He spoke, you know, not too Biden-y in terms of gaffes. And, you know, it's essential to get on a stable footing with China in terms of communication, economic, you know, the trade war cost us both money, and, you know, trying to, you know, curb intellectual theft. But basically, you know, we're still Russia, and now we've got the Middle East unstable. We don't need China's back up, so to speak. In addition to that, you mentioned the South China Sea, Taiwan, you know, calming things down. And I think in that sense, that's the image I think the president conveys.
Not too Biden-y, I think, is a pretty fantastic phrase. I will just say that. Yesterday, though, countering this idea of President Biden as the obvious incumbent, NBC asked Joe Manchin of West Virginia whether he would consider running for president. He said, "I will do anything I can to help my country." And you're saying, does that mean you could consider it? Absolutely. He did go on to say he didn't want to see the former President Trump reelected, but how much of a liability is a Joe Manchin run to a Joe Biden second term?
Well, any third-party candidate that gets on the ballot, and this is so important, you know, bureaucratically, that actually gets on the ballot in enough states, particularly swing states, will cipher votes from Biden and Trump. Question is, how many votes from either candidate? The Trump base is small, but very loyal in the Republican Party. You know, how many more Republicans will come along with that base if it's Biden? I'm not as persuaded Manchin, you know, takes all the votes from Biden. He could take a fair amount of votes from people who don't want to vote for Trump, want somebody in the middle. There's other people going to be out there on the ballot. It's all really about this getting on the ballot, not just making an announcement that you're running for president.
Well, let's segue here, Wendy. We got to go back to 1972 and Senator Muskie's tears in New Hampshire. Are we going to see tears January 23rd in New Hampshire? Once again, the Granite State front runs the Democratic Party.
Yeah, and we don't even know if that will count, right, towards the general tally. You know, New Hampshire tends to go blue more recently in presidential elections. So sort of picking a fight with New Hampshire doesn't seem to make all that much sense. But we know how crucial South Carolina was to Biden's win in the primary in 2020. And it's symbolically, you know, he's sort of fading a little bit in the polls among African-American voters who tend to be quite loyal to the Democratic Party. It's one thing to be loyal. It's another to turn out to vote a year from now. So really, you know, getting that enthusiasm back up among African-American voters in South Carolina as a national symbol is more important. Whether it's costly to Biden in a very tight presidential race, we're going to find out.
Wendy, thank you. Wendy Schiller there of Brown University on the latest. Are you feeling Biden-y this morning?
It's fascinating to me, and, you know, I think just as important as all the you know, Anne-Marie Horton on the West Coast Ballet is this New Hampshire. Suddenly, January 23rd is on us.
It's just around the corner, right?
It's seriously around the corner. When you take out the holidays and the travel, you know, what am I going to call it? 7 active weeks away from standing out. You know, you're standing. I was doing a live hit in Concord from the street, and this fire engine went by, sirens and all that. And they said, what is that? And I said, that's the lone Hillary Clinton voter in Celebration.
Well,
it's a long time ago.
Biden's name will not be on the primary in New Hampshire, and I wonder if it's because he might be considered too Biden-y by some people. I mean, that phrase highlights some of the concerns, and frankly, the concern around the dictator comment as well. Granted, he was prompted, and granted, you could argue nothing that he said was untrue. Nonetheless, you know, you could just punt and not really raise the temperature, right? I mean, this is sort of some of the questions of whether it was like the right venue.
Was it the right venue for that kind of question? I get so frustrated with news conferences just like that. I heard you say it. I'm with you. What do you expect him to say? If he doesn't say it, we're going to sit here and I'd be the first to say it. Why is he not just saying it?
100%.
State of fact, you're in your home country, he's come over, we know what it is, he's serving a life term now, there are no term limits for Xi. By any real definition, it is what it is.
I agree with you, and frankly, it's sort of being baited, and then everybody responded to the bait in one way or another.
John, would that have happened to Sunak and the British press?
Without a doubt, the press loves this game.
They would have asked the same rude question.
It's just classic moronic DC politics. You know, do you still think he's a dictator? I mean,
John's winning our team.
Yeah, it's not that I think it. It's just that by definition he is.
John's winning our team political coverage. Surveillance, our classic moronic political coverage.
Let's talk bonds up next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Equities on the S&P 500 just about unchanged. Yesterday, squeezing out a day of gains on the S&P following a monster day the day before. Right now, unchanged on the S&P, going absolutely nowhere. On the Nasdaq, negative by 0.14%. Some stability, believe it or not, in the bond market. 2-year, 10-year, 30-year. The scores look like this for Treasuries. 4.49.41. Yields are coming in about 4 basis points on a 10-year. All the happy talk of the last couple of days. Dan Iverson and PIMCO, speaking of Bloomberg, legendary investor over in Newport Beach, Tom. The inflation problem is far from being solved. Moving in the right direction is different than getting to the central bank target of 2%, give or take. We are moving in the right direction, Tom, but arriving at 2% is a very different story.
We have to identify calls made 18 months ago, and PIMCO had a great house call saying, everybody calm down, we will see a lower rate regime, and maybe this is now where it really clicks in. Certainly that's a house call that they have. I look at it, John, I look at the real yield, and I'm going to call it Midland here, from a 250 down to 216, back to 2.23, and off the news, off Walmart here today, which I think is suddenly a huge deal. NVIDIA next week, I think, will be a real bellwether. You know, I'm big time. I'm not knowledgeable on it, but you know, these kind of earnings, you say, well, what's going to keep this thing going? And those are the kind of events.
We'll get Walmart in the next 30 minutes, I believe, and then you're going to hear from Macy's and the Gap. Lisa went through some of the companies a little bit earlier.
Gap yesterday.
Let's finish on foreign exchange. I've got plenty of things to say about the Gap. In the FX market right now, the euro looks like this, 108.57. That currency pair positive 0.1%. Tom, the logistics, just the user experience, the e-commerce side of the Gap is just so awkward and clumsy.
You know, it's
just
like,
awful.
It's like out of the pandemic, some of the airlines, some have succeeded at this strange word, execution, and some haven't. And I wonder, you go industry, I wonder if the Magnificent Seven, which one of those is not going to execute? I mean, I don't want to be...
But you have to make it frictionless. I remember when Michael O'Leary of Ryanair would talk about the number of clicks it would take to book a flight.
Yeah.
We had Michael O'Leary around the table with us, and they did a great job of making it really easy.
I mean, for Bramo...
Amazon, just swipe, buy, done, Bramo.
For
frictionless.
Bramo, yeah, to pop business class, I mean, Bramo can do it with a couple clicks.
Yeah, although I do wonder what it means to be frictionless for the companies if people are ordering 5 different sizes and then going to send them all back. I mean, how do you sort of plan around people using the mail system as their personal dressing room? It just becomes a very big challenge, and things are moving faster than maybe some of these companies can adapt to.
The one thing that annoys me, and I've talked to you about this before, when you go and get overnight delivery, Tom, next day delivery, and you pay up for that, but it's next day from when they're ready to deliver it.
About a year and a half
So
ago.
you'll order it Monday.
It's crazy.
And they'll be like, yeah, we haven't sent that out yet. And I'll be like, yeah, but I said next day delivery. And they'll send it out Friday next day.
Yep.
And they'll make out that they've upheld their end of the bargain. What are retailers playing at?
They're playing it. They can't make money on next day delivery, so they've finessed this over the last 18 months.
Is that what it is?
I would defer to our retail powers, but it doesn't work.
We'll be talking about the retailers through this morning. Under surveillance this morning is our top story. President Biden heading progress with China's leader Xi Jinping after meeting in San Francisco yesterday. The 4-hour summit resulting in agreements to restore high-level military communications, combat fentanyl, and open a dialogue over artificial intelligence. Speaking with reporters after the meeting, Biden once again referring to Xi as a dictator, a comment that the Chinese Foreign Ministry called extremely wrong. A comment, Lisa, that I will acknowledge has become increasingly distracting, largely because of the way the media has responded to it. Ultimately, as you indicated, focus on the substance. There is some substance there to get your hands around.
And the substance carried through even with the statement from the Chinese ministry, the foreign ministry spokesperson of China, not only saying, yes, it's extremely wrong and irresponsible political manipulation, but then went on to say it should be pointed out that there will always be some people with ulterior motives who attempt to incite and damage U.S.-China relations, and they are doomed to fail. It seemed very clear China was not going to take this bait to go against what the progress was that had been made during this meeting.
Dinner in San Francisco, was Speaker Pelosi there? I don't think so.
Where are you taking this? The visit to Taiwan?
I think to Taiwan. I think this is an elephant in the room, as the Speaker felt like a lot of Americans, let's go. And the president is backpedaling from that within the niceties of the meeting.
I think President Xi said he didn't want a cold or hot war with any country.
Yeah.
Does China consider Taiwan a country?
Well,
if you really want to read between the lines.
Okay, there's also been, it's clear that nobody wanted to fight, right? There was some conciliatory comments by China saying that they're looking for closer economic ties with Taiwan, which was a change in tone, and Taiwan is electing a member to their government that actually has more China-friendly feelings. So maybe the temperature is going down. I will also say, though, at the same time, Congress was holding a hearing with Apple about why they canceled Jon Stewart's show, because Jon Stewart had some controversial comments about China, and they were saying, you know, what is the self-censorship of some of these companies? So are we moving in the same direction in all parts of government?
No. No, I mean, it's Apple, it's the Walt Disney Company, it's, you know, take your pick.
Exactly.
These are subjects they're so nervous about talking about because they think, Tom, they're going to lose business in mainland China.
Well, they lost business. They weren't allowed to show Barbie because they didn't show the South China Sea correctly or whatever.
Is that true?
Yeah. There was a map in Barbie that didn't, I mean, I've only seen it 5 times.
I haven't watched it yet.
There was a map in Barbie, like, you know, she's broadcasted or whatever. And the Chinese were very upset about the map of the South China Sea up to Taiwan.
I'm not sure about that particular example, but we've seen that in many examples of movies that come out of Hollywood, struggling to get access, Tom, into mainland China because that box office has become such a big deal to the business of some of these companies. Let's turn to some better news. In Washington, the U.S. Senate voting overwhelmingly to approve the House's temporary funding bill to avert a government shutdown. This delays a clash over federal spending until the new year. Not included in the bill, emergency aid to Ukraine and Israel, with Senate Majority Leader Chuck Schumer saying that would be the chamber's